Hello and welcome to ZaranTech. In today's fast-paced business world, managing revenue effectively is critical for the success. Companies need robust systems that ensure accurate revenue recognition and reporting. So today, with this video, we will dive into this amazing world of SAP RAR, which is also known as Revenue Accounting and Reporting. So in simple terms, RAR is a powerful tool that helps companies accurately recognize, manage and report revenue by ensuring compliance and accounting standards and regulations. SAP RAR transforms businesses by reducing revenue recognition errors by up to 30%. And it's not just about compliance but also about ensuring financial stability and building stakeholders' trust. So mastering SAP RAR is essential for accurate financial reporting and informed decision making, benefiting financial professionals, auditors and business owners. So in this course today, we will cover everything you need to know about SAP RAR, from its fundamentals to advanced functionalities. We'll explore topics such as revenue recognition principles, contract management and integration with other SAP modules. And by the end of this video, you will have the clear knowledge and skills to navigate SAP RAR confidently. Now before we begin, please make sure to subscribe to our YouTube channel and hit that bell icon for regular updates from us. Now let us look at our agenda for today's video. We'll start with main features of SAP RAR, then we'll move on to deployment options of SAP RAR, then third, SAP RAR architecture components, fourth, accounting entries used in RAR, and fifth, inbound processing BRF. Now, let's dive on to our session.
So today we're going to touch upon what are the accounting entries that are generated in RAR and how is it calculated. So the condition types. Now all of you all know what are condition types, right? The condition types are what moves from SD to RAR, and generally three condition types are a must. One is your PR00 price, cost, and SSP. In case you all decide to use SSP as a condition type, because that helps in allocation. I mean, that's actually the standard that everybody uses, but there are ways that SSP can be derived. There are people who do it based on material in the BRF plus, which becomes crazy because BRF plus, handling with thousands of material, it's a very risky thing to do and it's not a good design. So we are used to, so I took an example of Z just in case whatever, right? Like ZPRS, Z is all customized. But one more condition type that we have in the system in RAR is COR, correction entries. So we spoke about allocations, right? So how allocations happen and the system makes correction entries. We're going to see an example just now. And that comes with COR. Now I'm talking, these entries are all in RAR. So these condition types now you see in RAR, you see these getting posted in RAR, which is with condition type COR. There's one more condition type, which I've not actually mentioned here, which is EXTF, which is foreign exchange. So in S4HANA, they've introduced foreign exchange in RAR, and we are using it currently. It is advised that we use it. So EXTF also is used. That is another condition type. Now posting category. Posting category, actually, it becomes a second language in RAR. So, when we are talking revenue, we are talking RV. When we are talking CJ, we are talking cost deferred cost. So it becomes like, so posting category is in RAR, the system recognizes these postings via posting category. And as we, in the finance team and IT, as we start interacting, we are only talking posting categories. It actually, one has to make an effort to remember, that IC is invoice correction. So over here, the posting categories, if you see, CACL is contract asset, contract liability. We all know what is receivable adjustment, RA. Recognized revenue is RV. Cost correction is CC. Deferred revenue, unbilled receivable, and invoice correction. Recognized cost and deferred cost. Now, there's one way to present in the system. We adopt one way, which is CACL or URDR. Now, CACL is IFRS 15. So if you have SAP designing the system, it is going to be CACL because SAP goes strictly by CACL. Unbilled receivable, people do use it, but using all of them does not make sense. It's like either you use CACL or you use unbilled receivable and deferred revenue. There's one way to present the books. So now I'm coming to the example. This is the source system entry. The source system entry over here is trade receivable to sales. So we're just looking at, the sales entry over here, which is 41,540. And we're looking at the trade receivables, which is AR. So now we're looking at an entire contract logic. So the transaction price over here is 41,540, 400.60 and 21,658, right? This is the transaction price. So your total transaction price is 63,598.60. This I took a real life thing and I put it over here so that you all could see the source entry and how it gets changed and what are the entries in RAR. And then we will also go to an allocation table. So the standalone selling price for these are defined as 26,660, 312, and 7973. The allocated amount, can anyone tell me how did we get this allocated amount? The 48,520.
26,660 divided by transaction, I think, sorry, 41,540 divided by total standalone selling price into standalone selling price, right?
So it's actually the ratio of the SSP into TP. So it is 26,660 divided by 34,945 into 63,598. So it is taking the ratio of SSP into the total TP. And then it comes to an allocated amount. So you see the transaction price over here is 41,540, but the receivable is 48,520. And so we will have a contract asset of 6980.21. Now let me touch upon contract asset and contract liability. And we'll again see this, we'll be seeing this many times. Then it'll just come to you all, like, 3-4 examples and it'll come. So receivable minus the invoiced amount is your contract asset. So according to IFRS 15, the receivable amount, because we are allocating based on standalone selling price. So based on the standalone selling price of this POB, the revenue amount that we should show in IFRS 15 that we should recognize against this POB is 48,520.21. Now this is the receivable, but how much did we invoice the customer? We've invoiced the customer 41,540. And so 6980.21 is the contract asset. That is the difference between this and this. This becomes the contract asset.
Transaction price is a bundling selling price, right?
No. It's for each PO. Bundling selling price is taken into consideration when you are calculating the contract asset and contract liability for the entire contract. So that's when we take the entire bundle, voice, data, text for for 24 months. What is it that the customer will give
I
us?
got it. That here, my one quick question is that, so standalone selling price when you are selling that price independently, and transaction price is price when you are signing a contract or something, right? So in this case, if you see this example, the standalone selling price is very less, but transaction price is very high. Is those kind of scenarios possible in real time? So as you said, like it is a real time scenario.
This is a real-time scenario. So yeah, standalone selling price, like your charger, like I gave you an example of your phone and charger, right? So your phone is the charger that you buy it for 40. That is your standalone selling price. But Apple will say that if you go to all the stores, everywhere, and the whole world, for this material, I think I'll keep my standalone selling price as $30. But when you go to Toronto, it will be 35. When you go to US, California, it will be 28. When you go somewhere else, it could be some other cost. Standalone selling price is for the material that the company decides.
Shiva, it means like if I rightly understood, I think Shiva was asking the transaction price will be the contract price as a whole, right? So, but here the transaction price was again differentiated for each POP. So
the transaction price is always for each POB. The example that I showed you, and that is why I'm showing you this example too, because there are different examples. For each POB, when we do an allocation, even for voice, data, text, okay? Now, we've got to understand voice, data, text, and the phone will come as 4 different POBs in the system. And each of them will have a transaction price. Like the phone will have a transaction price of 230 and a SSP of 1,000.
okay.
The
so
voice.
You mean to say for each POB we will also have like standalone selling price, we will also have transaction price attached in the order, it seems.
Yes.
That is not my, sorry Kumar, so that is not my question. So what I was asked, that the transaction price means it is a contract price. Whenever we go for a contract, that always reduced price, right?
Correct. Yes.
OBO is okay, but my question is here is because she said it is a real time scenario. The real time, if you sign a contract with AT&T or something, it will be a lesser price, not the more price.
Correct.
But standalone selling price is very low at here. Means for some of the POBs can understand, but every POB is a low price. So on that case, I'm just thinking means like is this kind of business also be able to also available in real time scenario? So okay, yeah. If material price is they are calculating state wise or something, that's okay. Yeah, I'm okay, Shilpi, for that. Yeah.
Shilpi, one more question related to this. So if it is actually, as you rightly said, one example, so mobile charger. So mobile may be selling at $100 and charger is offered at free of cost. In that case, transaction price will become 0.
The charger transaction price, yeah, that will become 0 then.
Okay.
But
standalone selling price, we have to put actually, suppose it is $10 or $30, we have to put the transaction price, and the standalone selling price will be 30 and transaction price will be 0.
Yes, it really depends on how the company wants to show it. So the company is giving the charger free of cost along with the phone. They don't even include the charger as an additional POB that is going.
As a POB. So it will never be a POB. It will be included with mobile.
Right,
This
and that will be an indistinct POB. SSP low, the voice data and text that we give to the customer. So in case you're charging $70, the $40 that you're charging to the customer will be a TP, and it will definitely have a lower standalone selling price. So it will have a standalone selling price of 20. Standalone selling prices, and that is where the companies earn all the money. So text, how much does it really cost the company for texting? But they charge the customer, $10, $12, $15, saying per month $15 you have to pay. For them, the standalone selling price will be $1. So there are many, many materials where your standalone selling price can even be, we have in this company, we have standalone selling price because, we get a few
No, yes,
items.
I got to that point, but here question is, it's not about what actually material cost and what company is selling. So that would be a profit for them. But here question is that standalone selling price. It is also a price who is selling to customer when they buying independently, not with the contract, right?
Yes.
The standalone selling price. Yeah,
That's
which you are coming is like, for example, text is a $5 cost to the company, but they are selling to the customer $10. They are making $5 revenue. That is okay. But here it is not the cost plus revenue or something. So here it is standalone selling price is like a where single customer go directly and buy a phone or something. Where the contracted customer go buy a phone or something in the transaction price. So when I'm taking a contract, so it would be some discounts or some maybe the useful for me, right? And sometimes I can understand even the contract also can be sell on a more price because the customer is a bad customer or he doesn't have good credit or something, some cases.
right.
There is a risk to the company. So on that cases, okay, I understand. I agree with you. Yeah, can be possible means which my initial impression is that so contracts always be a some reduced amount and standalone should be a some more amount. So yeah, when coming to these kind of scenarios like a customer behavioral or something in then that could be okay. But here each POB have all POBs have more price than the standalone selling. So
Yeah.
then I just start to like ask you a question. Is this a real time? Is this possible or something? So just yeah, I got that clarification. That's okay for.
Yeah, and we have a standalone selling price of even 0.01 in some cases, and all these companies, no companies are, they all make profit in every transaction. So, but but good point. I get your point, what you're trying to say, and that is right, because cost, we're not really looking at the cost, we're looking at the SSP. So we have the contract asset and contract liability. Now, contract asset and contract liability can be calculated for each POB, and it is calculated for each POB. But the system, generally, how you really see it is you do it for the entire contract as a whole. So if your contract asset is 100, your contract liability is 30, the system takes an overall contract asset of 70 and amortizes that over a period of time. So there are calculations for that. And that is a better way to do it. If we do each POB wise, contract asset and contract liability, which some businesses have, like the current project that I am in, we are doing it per POB. So we do have contract asset and contract liability per POB. But telecom companies, they all go for contract asset and liability for the entire contract. And that is in configuration that one can decide. So that those are questions that come in when you are designing the system, seeing how is it that you really want to see it. and we show examples to the customer, and then the customer decides. So here, why is it that we have a liability? We have a liability because we've invoiced the customer more, but the receivable is less. And so it becomes a contract liability. Contract asset. So contract asset is a conditional right to receive. What does it really mean? What it means is that we've done the work. We've invoiced the customer 41,540, and we've given them what they wanted. The fulfillment is done, but we should have received from the customer 48,520. And so we have a contract asset of 6980.21. But when we invoice the customer more, we say we've taken $100 from the customer and we've given them services worth only $30. So the rest 70 is what we have to fulfill. We still have work to do, and we have to finish that performance obligation by giving the customer $70 worth of fulfillment. So it becomes a contract liability for the company. We'll come to this again. So let me take you through how. So I'm taking just one POB over here, okay? I'm just taking the first POB over here, and I'm trying to show you.
Can you please explain here actually? So how this contract asset and liability came? Because in all the cases actually standalone selling price is less than the transaction price. So in one case it is coming as asset, and other case it is liability. Is it correct calculation?
So exactly. So it's not upon the standalone selling price. Standalone selling price is again not the cost, like Mahasiva said. It is not the cost. We are only taking the standalone selling price. We are using it to get the ratio. So we are taking the ratio of the standalone selling price, and we are saying the allocated amount. So how do you read this line? You say that what we are charging the customer is 41,540, but what we are recognizing in our books is 48,520. So then what is the difference?
So how it is arrived? So can you take a calculator and all three calculations?
Yeah. So 41,540. So let me write TP 41,540. How much was this? 400.60. And 21,658. We didn't have anything. 0.00. And this is the SSP. So we are talking 26,660 and 312. 26,660. Sorry, 26,660 and 312 and 7973. Allocated amount. Now we'll calculate the allocated amount, and then we'll calculate the contract asset, contract liability. So the total over here is SSP is 34,945, right? And this is 63,598.
Okay.
So now the allocated amount. Allocated amount is always the ratio of SSP to the TP of the POB. That is how it is calculated. Okay. For this POB, it is 26,660 divided by 34,945 into 63,958, which is 48,520.
Okay.
So yeah, decreased. Just one sec. Okay. So we have 48,520 over here. So yeah, we'll have to put the dollar value. Can I just quickly do it? And we have 567. So now, you know what is more important over here that I really want you all to notice is the allocated amount. The allocated amount, the allocated amount and the total revenue. So even when you're allocating, see, according to IFRS 15, and I said that in the beginning, IFRS 15 requirements are to recognize revenue in a different way. It is not to change the revenue. So your total revenue always remains the same, always. So if this is 63,598, this is also going to be 63,598. But for each POB, we are going to recognize a different amount. So over here you have, so how do you interpret this? Let me go back to the presentation. So how do you interpret this line? You say that the transaction price for this line item is 41,540. But what we are going to be showing in our books and what we are going to be recognizing against this POB is 48,520. You know, the classic example, actually telecom has the most classic example, and that is your phone. The phone that we get is for 100 or 200, sometimes even $0, right? It's like a $0 phone because you're signing up a contract. So the $0 phone does, IFRS 15 says that phone is not worth $0. So you have to recognize revenue against the phone. So they say that for each POB, we have to allocate the revenue because nothing is free. The fact that it has a SSP, and really the SSP of only air is 0, you know, everything has a SSP because it's a material. So the fact that it has a standalone selling price, nothing is free. And based on that, you have to allocate the revenue. So they are saying that you have to allocate a revenue. Now there has to be some basis to allocate the revenue, right? Every company can take any amount they want. But again, remember the objective was to make it an international platform. So that two companies or three companies can be compared. A company in India can be compared to a company in US, can be compared to a company in Europe. So when all these companies are compared, there has to be some level of comparison. And they say that you have to recognize revenue based on your SSP of your product. So for this particular line item, though we are charging the customer only 41,540, the amount that we are going to recognize in our books of accounts, the amount that you're going to show as sales amount, which you're going to post to your P&L account, is going to be 48,520.21. That is the entire theory of IFRS 15. It's the revenue recognition, how we recognize the revenue. And again, I'm just repeating over here, the revenue does not change. You know, this is such a key concept, which I realized at one point of time. I mean, though we were going on and on and on in the first project, and then I realized the significance of this entire thing, that the revenue doesn't change. So if the revenue is changing over here, even though we are allocating towards, and that's when I really understood IFRS 15 what are they trying to do? They are only trying to allocate revenue and distribute the revenue amongst all the POBs so that we recognize revenue properly. And we do not say that, for the phone, we did not make any money this month for the phone, but we've sold about 1,000 phones. There should be some monies coming towards phones. Or we'll say that towards our phone, it's a loss-making thing. We earn only about $100 when we sold about 3,000 phones. So, those are things that are taken care of by doing this SSP and allocated revenue.
Shilpi, like for our better understanding, and it's a more education thing. So like, can you please explain in the same scenario, if we used unbilled receivable deferred revenue concept and contract asset and contract liability concept?
So unbilled receivable and deferred revenue, prima facie, it's the same thing. It's almost the same thing. There is a very small difference, and we had a full there was actually a full hour meeting with SAP for this when Bramisol and all of us were there and we were discussing it. But UR and DR and CCL, it's almost the same thing. It is how you want to represent your books of records. But you have to do it in one way. The books of records, it went really bad. So that's when it was established that you cannot be just adopting unbilled receivable and deferred revenue along with, contract asset and contract liability. It's how you want to represent your books of accounts. And if you have SAP designing a system, it is going to be contract asset and contract liability, because IFRS 15 says you must do contract asset and contract liability, and SAP follows that very, very strictly. I've not seen SAP, they post about that saying we've never really told our people to go with unbilled receivable and all that. It is possible. It is a system that you are designing. You want to show a unbilled receivable over here, and instead of contract asset, and you want to show a contract asset here. So it is possible. You just have to set up your system in that manner, right?
So that in that case, the account determination, is it a material level, or is it a company code level, or is it a sales org plant? Which level in that case, like?
Account determination, again, it depends on you. It's never at material level, but generally it is at the POB type level. So all the POBs that you have, okay, and we touched upon this concept about, I think day before, we've had only 2-3 classes. So we touched upon the POB type concept, right? So
yes,
you could say all your phones are, one POB type. The accessories are one POB type. The television services are one POB type. So, so your POB types are defined again during designing, and generally your account determination is at the POB type level, because
okay,
yeah, like phone, whether you're selling an iPhone 12 or you're selling an iPhone 6 Plus, the revenue, you want it to go to the same account, no, for the phone, because you are taking the
revenue is okay, but yeah, revenue, there is no discrepancy in the revenue. Anyway, revenue is P&L, it will go. Here, the thing is that contract asset and contract liability and unbilled receivables and deferred revenue. This is the concept is like striking as why we have to use this one, why we have to use this one. As you said, like it is a recommendation from IFRS 15, and there is a possibility to choose either this one or this one at the client level. Sorry, a client can decide. So in that case, if my client is choosing in the both, I want for some of the as you said, like POB is material, I can understand that's okay. For these kind of POBs, I want to go this accounting approach. For these kind of POBs, I want to go for this accounting approach. So on that case, is it possible, as you said, like it is possible, if maybe not in today, as Murli said, like maybe tomorrow class or somewhere, or maybe in the practice session, I want to see that how we can determine the accounting and how
Sure.
the reporting is going to be ending on that case, like how we are going to be calculate our balances. That is my requirement. If anybody wants to add or something, you can.
So unbilled receivable and deferred revenue, I can take you through the presentation that SAP had created, on what is the difference between contract asset and unbilled receivable. But I found they're almost the same thing. But contract asset and contract
Yeah, it means same thing. There is no pressure on you. Like just we want to see, so we want to try both. That's it.
Yeah, absolutely.
Because it is like it's a training, so requirement can come at any time. Right, in a SAP anything is possible. Today, this like in the one approach, maybe tomorrow the client say, no, I don't want this approach, go that approach. So in that case, how we have to act means like in that case, we are just asking you as an experience, you can help us to understand that concept. And if we want to deny that requirement, why we have to deny that requirement? We should give a strong reason, right?
I'll share whatever I know
Yeah, we
about
wanted that. So yeah, it is not a means like today itself, now itself I'm not asking. Maybe tomorrow class we can discuss more on that.
Yeah.
Just park this question for today's. Maybe you can read something or find something if you have any material or experience.
I do have. In fact, I would have it in this laptop only.
Sure. Tomorrow
Sure.
it is a point. Just you can park it, and we can discuss tomorrow this point. And we want to see in system also, like how we would do this one.
So the account determination and how is account determination really set, and how are the POBs derived, we will do in the BRF plus class. So that is a BRF plus, because that is where we define the rules and everything. So we'll do it in that class. But yes, we will touch upon unbilled receivable in this. So yeah, and that, now that you've brought up that topic, we'll definitely discuss it tomorrow. I will look out for that presentation, and I'll share whatever I know with you all. So here, now the contract asset. Contract asset is again receivable minus invoiced, right? So over here, it is calculated as this minus what we have invoiced, and that is 6980.21. And so it is not based on the SSP. Again, he made a very good point. This is not the cost. So even if it is lesser or more, it really doesn't matter. And over here, it is this minus this. Here the receivable is more, so 167 is the contract asset, and the liability will be, I did this minus this, so it came in minus, but you guys have understood. So here this is the contract liability. So whatever is more, the system will take that and show the rest as contract asset or contract liability. In this project, we don't really have contracts going, for a very long time, unless it's a time-based contract. So really,
second line is also the same as first line, so it is not minus. It is
exactly. I said that was my mistake. It is actually this minus this. So it is. So this is a contract asset. This is a contract asset, and this is a contract liability. Okay. So now let us go through one POB and see when this comes in the system, what are the entries that is passed. Okay. So we are going to take just this line today, because then you'll just grasp what are the entries getting created. Okay. So I tried to show it in T accounts. Now this is your current system. So we have AR to sales, which is 41,540. And in SD, this is what we'll pass, because we've invoiced the customer 41,540. We've recognized the cost of 26,660, and we've recognized a revenue of 41,540. Okay. Now, the neutralizing entry. So what happens is, and I straight away went to neutralizing. So whatever, the system, they say that, okay, we've earned a revenue of 63,598.60 because we've invoiced the customer this much. So this is our revenue. But when it comes to RAR, RAR says, no, we are going to be recognizing the revenue in a different way. So the first thing they do is they neutralize all the entries that have been made. So over here, this is your current gap and the neutralizing entry that is created. And now I'm coming to the posting categories and why posting categories were important. So it says invoice correction to RA. So invoice correction is 41,540. That is, it reverses the entry. So 41,540 we've recognized, it debits 41,540 and it credits the receivable adjustment account. Receivable adjustment account is your AR receivables. It's the receivable, it's the adjustment account in between. All the revenue transactions touch receivable adjustment. So it shows you 41,540. At the same time, it passes the entry to deferred cost. It says 26,660 is the cost that has come in, which is 26,660 debit, and cost correction. It is creating a correction entry for 26,660. Now, the system says, why does it even put it to deferred cost? Because the system says, no, I see there is a cost and we recognize a cost, but I'm not going to be recognizing the cost before I recognize my revenue, right? I have to recognize both of them together. And so the system lets the cost sit in deferred cost account. So we have revenue recognized. So here, please notice the posting categories because
So is it deferred cost is a P&L account or a balance sheet account?
So here's the deferred cost, which is a balance sheet account. Deferred cost is, and that is what is holding the cost. At the end of it, it becomes zero.
No, but here the concept is, sorry, I don't know, means like if everybody's understanding, sorry for stopping you. So you said like the 41,540 should be recognized, okay, right?
But no. Okay, 41,540 is recognized in the source system. This is an SD. This is where the blue color is SD.
Okay. Oh, this entry is in SD. So account receivable and revenue.
So we are reversing the existing entries. The first line, so highlighted in blue, or actually it is already passed in the SD system.
Okay.
So because highlighted in green, we are now posting the corrections. Again, there will be postings from RAR that may be in the next upcoming slides.
Yes, yes, exactly.
Okay.
So, so this is the SD posting, and then it comes to RAR and we neutralize all the postings. We say whatever has been posted, we are going to neutralize it. And after that, RAR does their posting. And that is when a POB is fulfilled and invoiced. So when it is fulfilled, we do RA is receivable adjustment to RV. RV is revenue recognized. So you see receivable adjustment debit and we do RV credit. So you see, and why I've shown you in these T accounts, then you'll see that it is all getting neutralized. And how is it getting neutralized? And then at that point of time, we recognize the cost too. So we are recognizing the revenue and we are recognizing the cost. The cost recognition is CO to CJ. But notice your CO and CC, okay? Your cost correction and your cost recognition is going to the same account over here. So that is why, like, see, 701,110. I've shown this on purpose, cost recognized, so that you'll see that cost in RAR is completely negated. RAR is a revenue recognition engine. So the purpose of RAR is to recognize revenue. It is not to recognize cost. But yeah, you can run, if you want, you can capture the GL. There are different ways how you can capture CO and run the books at the end of the day and see how much cost was recognized. But cost gets completely negated in the entries. And so debit CO to CJ. CJ is your deferred cost, which is getting completely negated.
Yeah, that one.
Okay. So standalone selling price, the thing is the ZPRS in this transaction was also the same. And that is why I showed it over here as, 26,660. These are entries that was there in the system already.
So that means it is actually standalone selling price. It is coming as cost.
Over here, right?
Condition type actually. So it is linked to condition type cost.
Yeah, exactly. You're right. That is the linkage. So it is linked to ZPRS over here.
So finally, Shilpi, actually, when I look at that postings, so after actually neutralization, so debit is there in GL account 121,000,000 as a receivable. Where is the revenue? So that 541,540, there is no revenue, right? 121,500 is debit and credit is there. Revenue recognized is also 61120 debit and credit is there. So where is the other leg?
Now,
Okay.
yeah. So here, see, so this is, that is like a very good question. So over here, what I've shown is revenue recognized. I showed the neutralizing entry going to one account. So you see over here, we were showing the original account is also 611,200. And over here, the revenue recognized is also 611,200. So actually, this is what I showed. What will be the effect? So it is strongly recommended that RAR as a subledger has its own GL accounts so that you can show the amount that is coming, you neutralize it, and then you capture the revenue in a different account to show that this is the revenue that we've captured. This is how it should be set up.
Okay, so RAR, it will have its own adjustment accounts, so it will not disturb any existing postings in FICO.
Yes, and that is how when you run your books of accounts, you can see that how much is the revenue recognized. You run your GL and you'll get your revenue recognized immediately.
Initially, we discussed that is just a reference purpose to determine the allocation price, but here it is again coming as a cost. So on that case, so is it a pricing of the material or something, this SSP?
SSP depends, really, it depends upon company to company, okay? Now, SSP is not the pricing, no. Your cost is different, your price is different. SSP is, if you're walking on the road and you want to buy something and go to the shop to buy without anything attached to it, how much is it going to really cost? That is SSP. So if I walk into Apple store today and I want to buy, the charger, or I want to buy something else, I want to buy an iPad, how much is that going to cost me? That is the SSP of that item.
This is a kind of confusing concept where this Once we are selling as saying as selling price, standalone selling price without any contract.
Yeah, that is
And
the
coming
same.
to the next slide, now it is becoming the cost. See, when we are purchasing something as a standalone, there would be whatever cost, it could be much lesser than what price which on which we are getting that particular product, right? Without a contract. But it's maybe I am getting confused. Maybe I don't know about others.
Yeah, me too, right? Because as of now, which from starting class, we understand that this is just a reference price somewhere like price can be sold at a standalone selling. Means like if I'm buying independently, that is a price you said. It is not a cost or something. So now it is becoming a cost. Cost means like it is again a different concept. So who will sell the cost to the customer?
Yeah, so let me clarify with Shilpi. So Shilpi, in real time, so in other projects where you worked also, that SSP is linked always to ZPRs that cost, or it is something different, it is assigned to cost?
It is always different.
Okay.
There are some things, the company could define like that, but it is always different. The cost of creating this laptop for me could be $200. I'm selling it for $2,000, and the SSP for this is probably $1,800.
Okay, then actually, so it is just example you have taken in this case, but it is in real time when we go for implementation, both SSPs and costs are different.
Totally different, yeah. And especially in Apple, you're going to find that it's going to be completely different. Because SSP is, in telecom companies, SSP is very, very well defined actually. SSP in software companies is not very well defined because they do not have a lot of these companies, they don't have manufacturing units of their own. So SSP for them and the cost becomes what the cost that they pay to the vendor to acquire that thing. The SSP is, they say, okay, let's take it the same as the cost, because that is what is, what we are going to pay if we go to the market to buy it. So it really is a concept which each company adopts to show how they're going to be recognizing revenue and how do they want to allocate the revenue between different POBs. So if a software company wants to allocate it based on,
So I can give on that case example, Shilpi. So can you take your Excel sheet?
Yeah.
So there is a company I'm giving from a software services which is giving. So like for example, they give cloud service which is infrastructure of some value. Maybe you can write something.
Yeah.
Maybe you can write it down in the levels like each POB. So POB 1. So that may be something is infrastructure services.
Okay. Okay. So
Cloud service, it can take as a Google as an example. Google gives some cloud services.
Infrastructure services, yeah.
Microsoft, so, yeah. So then again, Microsoft gives some technical services like AWS, which is the Java or something, Oracle or something. Software services. And in the third POB, may they give consulting services. And that consulting is not a directly consulting. They offer something is, you can take example as a TCS. Microsoft reached us as a different vendor. And on behalf of Microsoft, we are implementing something to the client, customer.
Right. Yeah.
Yeah, in this case, please tell us the accounting entry. So as you said, like it is a cost concept or something for a software company. So this is the real-time example of software companies.
So, okay. So in this case, like consulting services, okay. What do you say is your TP and what do you say is your SSP?
You can take something. You can take any figure. That's fine.
So consulting services, let me take it for one.
Everything contract is 24 months.
Okay, so for each resource, you're going to charge 200 into, okay, so let's take it
Maybe
per
you
month
can take
cost.
bulk, don't for hourly rate. So I take as a annual maintenance contract only. So that's fine. So
That's-
something amount, some
Yeah.
bulk amount you can take it.
So let me take 1,000. So 20,000 into 24 is 24,000. Okay.
Yeah, that's fine.
Okay. And so we're charging this to the customer.
Yes. And infrastructure, maybe you can put something 2000 or 1500, anything fine for 24 months.
For 24 months, it'll be 2,000, or will it be 2,000?
Anything, whatever the flexible for calculation, you can take any example. This is also 24 months, you can take some example.
So
This
let,
transaction price. And if I'm selling this to a standalone, it may be
okay.
something more cost. Okay, maybe you can take SSP as like a 2200.
Hmm.
And software services, maybe if independently I'm selling like a 5000 or 5500. And consulting services, like actually here the consulting services independently I don't have service, but as a contract I'm selling. But here I sell like independently 2000 or maybe 2000 or 3000. You can put 3000.
So 3,000 into 24, right? You
Yeah,
will do
3000 you can put as a, this is a 24 months calculation, right? 3000, and I'm going to be pay vendor from this because my client don't know what I'm going to be paid to my vendor. So I'm going to be pay my vendor like a 1500 to TCS.
you're going to pay
1500 from this consulting
yes.
services as a, my cost is this one for this POB.
Okay. So, okay. So, you know how will, so, okay. Let me take, first of all, let me show you the calculation of contract asset. How will the revenue be calculated? What will be your journal entries over here?
Yep.
So, is equals to this divided by this into this. So though we are charging the customer only 2,000, we are actually going to show a revenue of 6,333. That's the allocation over here. Okay. $15,832, and over here it will go really less because your SSP is only 3,000. So though we are charging the customer 24,000, the fact is our SSP is only 3,000, which shows that you know, which shows actually that this thing is cheap for us and we're making good profits on this. So we, because our resource, this is high, the skill set is high. So, and then we have 1,500. So now now the first is IC2RA, okay? 2RA. So when it comes into the system, we will do an IC. An IC is $2,000 that we've charged the customer. So we'll do, for one POB I'm taking, 2,000 to receivable adjustment 2,000. This is your neutralizing entry. We are first neutralizing this in the source system.
So that is SD, right? That is SD entry.
No, the SD entry is AR to sales, right? So the SD entry will be AR to sales.
Okay.
So,
AR to sales is 2000, right?
yeah, it's 2,000, 2,000. We are,
For that, you are adjusting the entry with IC entry, IC and RA. You are taking into
correct.
revenue accounting. That is with the
Yeah.
transaction price, right?
Yes, and I am taking only the I'm taking only RAR over here now. So this is in source system. So what I showed you was only for your understanding.
Okay.
So that is AR to sales. But this is in RAR, we'll do IC to RA 2000. Then we'll do SSP does not come. SSP is a statistical condition type. It does not create any entries. It is only for calculation purposes. And your cost will be CJ to CC. And let me take a cost of 1500 over here because we are doing this POB. That is why. Okay. So 1500. So what will happen is 1500 over here. So when your RAI comes into RAR, it comes with 3 condition types. It will come with PR00. Let me explain this actually. This is a good example. It will come with a PR00 of 2000. It will come with a ZSSP of 2200. And it will come with a VPRS of 1500. That is how you read it. So now the system says this is going to be your SDOI. That is
Okay. So
your...
you mean to say these all conditions are already derived in SD system, right?
Yeah, correct.
What
And
is the price and what is the SSP and what is the cost? Everything is already there in SD contract and it is moving to RAR, right?
Perfect, Mahasiva. So when it comes, so when a SD order is created, okay, when the SD order is created, the SD order moves into RAR as SD order item. And it can come with more condition types. These condition types will definitely be there. PR00, ZSSP, and VPRS. ZSSP, I made it, I mean, it depends on how you name your condition type. I made it Z. So, yeah.
That's okay. That's okay. Because as of now, our assumption is that where that 1500 is coming. So earlier you said like SSP is a cost. So now the cost condition is also coming to RAR. Means we have a reference, right?
Yes.
We have a reference through condition of GPRS or maybe VPRS, whatever it may be.
Exactly.
Okay. So now you can go with the accounting entries. Yeah.
Okay. So it will be IC to RA, CJ to CC, and then we'll go to, okay, fine. So now I can go back to the presentation, or do you want me to continue here? Anyone else?
Yeah, please continue, Shilpi.
Okay, fine. So IC to RA and CJ to CC, this is the neutralizing entry. Okay. And then I'm going to be, now when my fulfillment item, that is SDFI fulfillment item and SDII comes in. Okay. That is when my fulfillment item and invoice items come in. Now there are different scenarios and we'll touch upon that when we touch upon configuration and BRF plus and everything. So there are different scenarios, but SDFI and SDIIs will come in and revenue and cost is recognized through these. So when SDOI comes in, this is your planned revenue and planned cost. When SDFI and SDII come in, we recognize this revenue. So the revenue recognition will happen over here. So here the entry will be RA. RA is receivable adjustment to RV, which is revenue recognized. So receivable adjustment to revenue recognized. But this will not be 2000. This will be 6,333. No, sorry, I'm sorry about that. It will be 2000. I'll explain this to you. And this will be cost recognition to CJ, which will be how much is the cost? 1500. So your cost gets totally neutralized. Now comes, so I'm going to keep the cost over here. Okay, now this is important. So RA to RV, we have the entry, which is we've earned 2000, but the system says that we should be earning 6333. So that is equals to this minus this, which is actually 4333. Oh, what did I do? This minus this. Okay, 4333. Okay. So what the system does is, remember I spoke about core condition type. So it creates another entry, which is RA to RV for 4333. This shows you that the core, and it comes with a condition type. So each of these entries, when they're passed in RAR, no, they are passed with condition types. Okay, so this is ZPRO, PR00, sorry. So let me show it to you in the presentation. That will make it more clear, because over here it can get
Okay,
confused.
yeah, no problem. So yeah, we'll continue. So we'll see in the system, like how it is going to be.
Yeah, because
But here, one thing, can you note down this point also? So again,
yeah,
said like the allocation is going to be happen in RAR system. But here, the revenue recognition, which is like a difference allocated amount difference is also coming from SD condition. So how that is possible?
no, or is not. So maybe you joined late. I explained that these are condition types that are coming from SD. Core.
Yeah, these are coming.
Yes.
These I have. These I am okay. So which is like a price, like a transaction price, SSP,
Correct.
VPR
These
as a cost. I'm but a core is just now I'm asking about only core. So
correct.
it said the core is a difference of allocated amount minus transaction price, right?
Yeah.
So core allocation is happening in RAR engine. It's not happening in SD system, right?
Yeah. So this core does not come from SD. This is a condition type that is defined in RAR. And
Okay.
this is
Just back you said like
conditions.
it is also coming on a condition. So there I have a doubt. So if it is happening in SD, sorry, RAR itself, okay. Yeah, let's see in the system. Yeah, you can continue. Yeah.
So you have to see one thing. What is the total revenue over here? The total revenue that we are recognizing.
333 is the total revenue.
Correct. Yes, because that is what we have as total revenue over here. That is, see, that is revenue recognition, and this is the main point of IFRS 15 and the contract asset, contract liability.
Okay.
So
yeah, we will see in the system. So I'm okay. Like
so here's the thing. So 41,540 is the RV. So we've recognized 41,540. But you remember we said that 6980 extra has to be recognized. And that is when we do a revenue allocation and with a condition type core. This is the condition type that is defined in RAR. And here we do RA to RV. So your total revenue that we are recognizing in your P&L account is 41,540 plus 6980.21. Okay. And now 6980.21 is due to allocation. So we've recognized this revenue towards this POB. For example, this can get actually a little confusing, but for example, your phone. We said the phone is, we are charging the customer 200, but the phone cost, the SSP of the phone is 1000. So we saw that the allocated revenue against it is suppose 700. So we are going to be showing 700 as the revenue earned against the phone for that particular month, that particular period. And then we create a contract asset of 6980.21. So we debit contract asset to RA receivable credit. RA account becomes 0 over here. And we have recognized revenue of 41,540 plus 6980 for this POB. And your contract asset after that, it is, so there is a clearing entry that is passed, which is, where we make your contract asset 0, and against the receivable adjustment, it all comes down to 0 then. And and that's how, okay, this is another POB. So these are basically the entries that are created. Now, in the Excel sheet, if we see.
In the Excel sheet, you showed me the correction entry as 4,333. When you go to the Excel sheet, the correction entry was 4,333 that we adjusted from the allocation, right?
Yes.
But in the slide, I think probably you're showing as the whole amount as the correction entry, the whole allocation amount as the correction entry.
The whole allocation amount
as a correction entry. Can you go to the?
Yeah.
Here, when you see the allocated amount was 6,980, right? You're passing the correction entry as 6,000.
Yeah.
980, yeah.
6,080. That's because that was the additional amount due to allocation, right? So, see, the difference, we charge the customer 41,540, but we are allocating an amount of 40, but we are going to recognize the revenue of 48,520. So,
okay.
980 is the additional amount. So we show the revenue of 41,540 and we show additional revenue with core correction entry. So that is where you can see that, okay, core entry is due to allocation. The ZPRO, and you know how it comes in the system? It's actually a very clear-cut thing in the system. In the system, it shows you that PR00 is, it will show you in our case 2000, our revenue, RV, and it will show you RV of 4333. Revenue became small. Okay. And it will show you core. So when you read it, it will show you that you know, when you see it in your entries, you will realize that, okay, in this contract, I have earned 2,000 against my transaction price, and we've shown extra revenue against the correction entry, which is an allocated amount. And this has, core is always due to allocation because of the SSP allocation that has happened between the POBs. This is, and it's not an easy, like, you know, I maybe like you all are CA and ICWA and all that. So, but this concept, I took a little time to grasp. It was like that aha moment, you know, when I was doing my 25th contract, and suddenly I understood the entire system and what is happening over here. But it took me time. So this is a complicated system, and the contract asset calculation, the contract liability. In fact, I wanted to take you through another another sheet, which, you know, my first project actually was TELUS. I don't know if you've heard of TELUS. TELUS is, it's a telecom in Canada. It's huge. And TELUS was implemented, that was like implemented by SAP. when we co-created this module, the RAR module along with SAP. And so, that Excel sheet that I was showing initially is the Excel sheet that we used for telecom. And that is what I wanted to take you through, and how did we calculate, because what I'm showing you right now is from my current project. My current project has a very flat structure. We don't have contracts for 24 months, and every contract is not going for 24 months. It's like contract asset is created, it is negated in the same month, and everything is zero. The revenue is earned, that contract is completed. But telecom is very, very complicated, where you amortize. So when you have a contract asset of 6980, you amortize that over a period, over the life of the contract. And that is, again, that calculation and what are the entries going to be in that is a little more complicated. And we can see that tomorrow. We can get into that entire calculation, and I'll put the entries in the table like that. So you all can, you'll all be able to relate to it and how the calculations are coming and what are the exact entries. I'll show it for the first, probably first 2-3 months, like in the T table on what the entries are going to be. But the concept remains the same, right? Whether it's telecom or whether it's another software company, the concept remains the same. And the concept remains the same because your allocation happens amongst POBs based on your SSP. SSP is an extremely important concept. It has to be designed properly. And if you've got SAP designing it, it is going to be proper, because they have been stressing upon this concept. We understood this entire thing. And if so, that then you have the contract asset and contract liability. The contract asset amortizes over the life of the contract. So generally you have 2-year contracts. That is how the telecom companies generally have, right? They have these 2 years and 3 years contracts. 2 years has become a norm, actually. So tomorrow we can see an example where it amortizes. How does it amortize over a period of time? What is the rate that we take? Because it amortizes equally, and then it comes down to 0 at the end of 24 months. And when it comes to 0, it finishes over there, and the contract goes into the completed status. So that Excel sheet, and I'll create the entries for that in the T table. So this is how, but the concept again is the same. It's allocated, and that is why I was stressing. So though we are showing so much of amount over here, we are showing so little amount. Though we are charging 24,000, we are recognizing only 8,600. But the total revenue always remains the same. Because really, IFRS says we are only recognizing revenue based on IFRS 15 standards. The total revenue is always the same. So, so this is what I've shown for POB2 as well. So this, like I showed, the contract asset over here, I've shown for POB2 as well. And I've shown the correction entries over here of 167.23. Like you all pointed out, it's actually the contract asset. And then over here, I've shown the contract liability. So here, the key code for this is FAR_IMG and inbound processing. It actually will touch upon inbound processing a little more. I jumped in over here only because yesterday inbound processing and integration was just such a drag, like there was no interaction. So I said, once I get the system, we will go through it. So over here, when we, accounting principle specific. So when we configure the accounting principle specific, it's not taking anything. The use of SAP is subject to special release. Okay. So RAR, it's not allowing me to go into it at all. So over here, there is a you can actually choose, So as you all are designing the system and implementing it, in this particular node, there is a setting which says you can calculate contract asset and contract liability for each POB, or you can do it for the contract. So in telecom companies, they generally choose by contract, but in my current project, they've actually chosen by POB, which is quite messy because in every contract, you see contract asset entries also, and you see contract liability entries also, which is not the best scenario, but yeah. So this is the node where you have that configuration. So you do, why I'm telling you this is you have an option. So even as, you all are designing, you know what the options are. Yeah, so here I showed contract liability, but I've not shown any of the contract asset, contract liability clearing over here. And we can touch upon this, okay? And this Excel sheet that I'm showing you, this Excel sheet doesn't become very obvious even as you see the entries, and you're seeing the entries, what is happening, what is the system posting, what are the GL document entries. It's not very obvious. So when you understand this concept, all the entries that you see in the system, it starts making sense. And how has SAP passed those entries? How on what basis has RAR passed those entries? It all becomes clear. So anything else that we've done till now, we've done integration, we've done inbound processing, we discussed yesterday. We did RAI classes. We did, we touched upon the different events that are there in the system, OI, SD, FI, and SDII. We've touched upon, so if you're not, we can go on mute. That would be nice. If you're not talking, let's just go on mute. So we've touched upon the condition types, like order items come in with what kind of condition types. Then we have FI items. We've touched upon the architecture, that is ARL, the configurations happen. We only just touched upon BRF Plus. BRF Plus is a completely, it will cover that entire BRF Plus in one session. So BRF Plus has to be understood, and at that point of time, we'll also see how we set up our account determination. What is the account determination? How do we set it up in BRF Plus? We'll touch upon that. So that is in the future, but we've touched upon SDIC, the integration points. We'll go through the entire configuration. The configuration we've not gone through, but at the end of it, what are we configuring and where, and what is it leading to, you all will understand. Even when you're supporting and you see some problem, it is coming because of what kind of configuration. So we'll go through the configuration, though RAR configuration is actually very basic.
All right, now let's test your knowledge. Here's a quick question for you. What is the primary purpose of SAP RAR? Option A, to manage payroll processes. Option B, to handle customer relationship management. Option C, to comply with new revenue recognition standards. And option D, to optimize supply chain operations. Now take a moment to think, and when you're ready, do type your correct answers in the comment section below.
Hey there, ready to master SAP RAR? Our course is your ticket to becoming a pro at managing revenue accounting and reporting. You can learn at your own pace right here on our platform. Throughout this course, you'll dive into SAP RAR, a powerful tool for handling all things revenue related, from tracking sales to generating reports. We cover it all, from the basics to advanced techniques, crafted by experts in the field. Your instructors are seasoned pros, dedicated to helping you grasp every concept and answering any questions you may have. And guess what? Our students love it. People just like you have found our course incredibly beneficial. The best part? It's budget friendly. You won't have to break the bank to gain this valuable knowledge. Ready to become a SAP RAR whiz? Enroll now. For more details, visit ZaranTech's website.
So I was going through this, and if you see unbilled receivable and deferred revenue, unbilled receivable and deferred revenue initially, like over here, what is unbilled receivable? It's fulfilled revenue minus your invoiced amount. One can argue, one can keep arguing.
This meeting is being recorded.
We had many sessions on this, discussing these things. But at the end of it, unbilled receivable and URDR was something that was followed before RAR came into the picture. How was amortization done at that point of time? Every company took amortization the way they wanted it. They said, we'll do 10% for the next 5 years. We'll do something else for, like everyone had their own way to do it, and they showed some amortization. That's when IFRS 15 kicked in, and they said, we have to standardize this. And they set CACL, and it is going to be amortized over the life of the contract. And that became a standard across the world. And that is why CACL. RAR is a very powerful engine. You put in 10,000 POBs, it will allocate 10,000 POBs, and it will give the right entry for those 10,000 POBs. That's the power of RAR. And, like if you want URDR, get into your own IFRS, get into the own accounting principle. RAR has this facility where you can create IFRS 15 as an accounting principle, and you can create GAAP as an accounting principle. I have not worked on that, but I know it has a facility like that. And if you do GAAP for the same contract, you can show GAAP revenue and you can show IFRS 15 revenue. So there, in GAAP, you can do unbilled receivable deferred revenue. In the other, you could do CACL. Because the concept of amortization and, the entire, that receivable, the allocation was never there earlier. So those concepts have come only with IFRS 15. And some people have even tried to do all 4 in one, and it has failed. So there are failure studies that SAP, talks about. And they say this is a concept that is in the past. And what we have right now is CACL, follow that. But remember, CACL is calculated for each performance obligation, but always the entries that get posted is for the entire contract. It's not just for one performance obligation, unless you specify that. And in telecom, they really don't. Like telecom is pretty complicated. They never do that. URDR versus CACL. And at the end of it, you can call it whatever at the face of it. RAR, IFRS 15, calculates CACL in the background. You call it unbilled receivable and deferred revenue. The system in the backend will do the allocation and give you the CACL effect. Because that's what it's supposed to do for IFRS 15. And every transaction, when we go through revenue recognition, when we go through the different reports that you're running, every transaction, the accounting principle input is a mandatory field. So it will ask you what is the accounting principle you want to calculate it for. And when you write IFRS, it gives you accordingly what is there is in the system.
So Shilpi, across the industries, so what exactly it is followed? Actually, majorly it is followed as CACL or URDR?
CACL.
Okay.
For like across, so IFRS 15, this entire IFRS, it brought about a kind of regulation in the world because everything was set. Companies in India did whatever they wanted to. Companies in US did whatever they wanted to. In Europe, they did whatever they wanted to, whatever they believed in, right? There were these traditional ways, but that did not allow the companies to get compared to each other. So to create a common platform of comparison, the IFRS 15 came out with this. They took about 6-7 years to develop this IFRS 15 regulations, this entire thing. And they came out with it in 2014, May 2014. And they've been improvising it because they've just come out with foreign exchange also in S4HANA and all that. We can have even foreign exchange in RAR, and there's a good chance that Apple will have it. So we've implemented foreign exchange in my current project. I really researched on it and I presented it and we implemented it. It's again, foreign exchange, to keep it mildly, foreign exchange is taking care of the RA balances. So the running RA balances always have to be taken care of. That's what foreign exchange is doing in RAR. And we can touch upon that. That was not something that we've mentioned in the course, but we can definitely touch upon that too. So now, in S4HANA, why they had this presentation. Earlier, what used to happen was when you run the invoices have come in or the fulfillment items have come in, and when you run the recognition program, it would calculate your CACL. But now in S4HANA, everything has now gone to due date of the invoice. So they say that we are going to do it on the due date. So if your payment terms, it's 30 days. Regardless of the fact whether the customer has paid or not, on the due date, the system says, okay, the invoice has come in and now I will take the invoice into consideration and calculate CACL. Before that, the system doesn't calculate. This is something new in S4HANA. And this is actually the due date thing has become a big controversy. Siemens and many people have gone and said, this is crazy because all we are doing is we are keeping the balance in RA when it should show a CA and it should clear it out. Or we have a CA balance and it's not clearing it out. So when we do our year-end reporting, we are showing a CA balance. So because the system says, no, I'm going to do it only on due date of the invoice. I'm going to clear it only on due date of the invoice. So there are many companies that have actually canceled that and taken the due date to be immediate because really whether the customer pays or not, we don't know. And that is happening in AR. So we don't really have to bother about that. Over here, we just want to calculate the CACL. So it is all upon due date of the invoice. So that is why SAP, gave this, because naturally, I mean, they plan it from in advance, right? So, but the whole concept over here, if you see, the definitions are the same. What is missing in unbilled receivable and deferred revenue is the allocation and the amortization over the life of the contract.
Shilpi, you bring up the topic. So, for example, invoice due date based revenue recognition is started. If customer is not paid, so is there any possibility that to add some more additional field or something to get to know customer is paid from the payment document?
But why would you want to do that?
The revenue recognition starts after customer payment only, right?
So revenue recognition, so that we cleared it off, right? But the revenue recognition starts when the customer is invoiced. We never wait for the customer payment. Now, customer payment can come early, but you take, when you invoice the customer, you take that as a sale made, and this is the revenue that I'm earning. That is an assumption, like that is what it takes everything at gross.
Okay, but just before your comment only I took as that. So invoices I can understand that, but you only said like this. There is a lot of discussion is going on that if customer is not paid or something. So
yeah, this is a huge controversy, and even in my current project, I actually canceled that, and I've put that code, in the baddie to make it immediate.
then what is the means like a solution finally?
So the solution is that when the invoice and the fulfillment item comes in, it will calculate CA and it will clear it off. So clear it off as in, if the contract is completed, everything is completed, the CA is not kept hanging, because we've got to do month-to-month reporting and we've got to do year-end reporting. And in our year-end reporting, there is one important thing, and especially for Apple, my company is not even a public company, but for Apple, these are public companies, right? And public companies have to disclose on unfulfilled POB. So unfulfilled POB, contract asset, whatever remaining contract asset, they've got to disclose all this to shareholders. And this disclosure will carry so many amounts that are not even proper, because really the contract is completed, but we are still showing as if this contract is still going on, and that is why the contract asset balance is there. So it should get cleared off when the contract gets completed. That's the entire. So, maybe this is not because I'm just talking this language because I'm doing it right now. So what happens is, when the invoice and the fulfillment item comes in, the system creates a contract asset. Okay, like I showed yesterday, we run the program and the revenue recognition program, and we see a contract asset getting created. And when the contract, and immediately, if the system realizes that the contract is completed, it passes off a clearing entry. So CA, it has a balance, right? The CA account, the contract asset account, there is a balance hanging in contract asset account. That gets cleared off. The RA for that contract is 0. Everything is 0, and that contract is in completed status. Now, the due date of the invoice could be, say, 3rd of Jan or 4th of Jan. And I'm taking everything till 31st of December, and I'm reporting on it. So when I'm reporting on it, I say the contract asset, that is remaining to be cleared is, suppose, $500,000, and $500 or $50,000. $50,000 is not really the case. That means the minute we show contract asset is hanging, it means there is something more that has to happen in that contract. More in the customer has to be invoiced, there has to be revenue. Anything that is a balance shows that that contract is not completed, and something has to happen in that contract. So, which is a wrong, which is not the right, which is not the right thing to show, right? Because that contract is completed on 31st of December. So there was a lot of controversy around due date of invoice.
So that means actually some other performance obligations are pending, then only there will be balance, right? Otherwise CA and CL net effect should be 0.
Yeah, the net, yeah. So yes, but based on what you said, it's not that some other POB is pending. It depends on, like in telecom, they generally do it for the contract. Like this thing is very important. CA and CL is calculated for each performance obligation, like the example I showed you yesterday. So those, we take it, for each POB, we take it as for very flat kind of organizations. But for telecom and all, we sum up, it is always taken at contract level for telecoms. You cannot take it at POB level. It will become impossible to calculate. And we sum up the CA and CL for the POBs to get CACL for the contract. So
Correct,
what
Shilpi. So what I'm telling is, actually, suppose yesterday we have seen example, right? Transaction price is suppose 1,000. Okay.
Yeah.
SSP is 750. So 250 is the difference. So what we allocate is actually as per transaction price we will allocate. So the difference of 250. So there will be balance in contract account, contract asset 250 and contract liability minus 250. Net effect is 0. So at the end of the year, when we are going to report, so we will to the balance sheet account, it will go as 250 in asset and 250 as liability. So both the accounts, it will never become 0, right?
Correct. You got it. Okay. Yeah, I got it. Yes, you're right. Like, when it is at the contract level, the CA and CL cancel each other.
Correct. So both are separate GL accounts, but there will be balance. When you combine both of them, it will be an effective T0.
Yes.
I don't think so. Shilpi, like, because whatever we are recognizing more than the SSP or something, SSP or maybe transaction price, transaction price, that should go to CA account. And whatever we are not less recognizing from the transaction price, that go to contract liability account. And these both, how could it be a 0? Means like, how contract level can it be a 0?
At 0, right, Shiva? Actually, what they are doing is, see, yesterday we have seen example of 3 performance obligations, POBs.
Yes.
So 2 of them has higher amount, 1 of them is lower amount. But actually, so when it compared to that transaction price and SSP, the 250, whatever it is here, it becoming net effect is becoming 0, because anyhow you are recognizing only SSP.
No. Recognizing is transaction price, not SSP.
Sorry, recognizing transaction price. So net effect is 0. Yesterday we have seen that, right? Actually, so otherwise.
Then what about recognize account? So recognize account, and this liability and asset is going to be stored some balances from the after allocation, whatever the difference from the transaction price, that is going to be stored in the asset and liability account, and that will get post while doing a revenue recognition.
Finally, it will be 0. So contract account will have 250 balance, contract liability will have 250, finally it is 0.
Yeah. At the end of the life of the contract,
life of the contract, it go for a 0, because you are reducing, you are amortizing from the contract asset some amount, from contract liability some amount. But when you see at the moment of between of the contract, is contract asset and contract liability account is not going to be matched, right?
Yeah, man, it will match. At any point of time, it should match.
At any point of time, it will match. Both of them match.
Yeah. In fact, Mahasiva, I'll show you this this Excel sheet today. Let me go to this Excel sheet. Please. So do you want me to send you this difference between contract asset and unbilled receivable?
Yes,
because
yes.
you
want
please.
Okay, so I'll send you these 2 slides. Okay. This I took from one of the from somewhere which is distributed. So I kind of took an extract of it and I put it here. So this shows the calculations, but I'm pretty clear about, like, over here, when I am into a project, I do not allow deferred revenue and unbilled receivables. And I didn't even do it for any of the revenue streams over here in, in my current project. So let me show you this Excel sheet. Okay. Now let's get, because this is a typical telecom company contract and this is the basic, it only gets more and more complicated from here. So it's important to understand. And what you were saying, no, CACL coming to 0 and clubbing, this concept is over here. So let me show it to you. So here what I've taken is I've taken one POB for 230, SSP of 720, and these are numbers that I've really played around with. This is how I understood this whole allocation, and so I always take these numbers. So the hardware event, when I'm saying it's a hardware event, it is the phone. So your transaction price is 230, the SSP for the phone is 720, and all the three services, okay? I've taken voice, data, and text, all the three services over here. But remember, GL determination is done at a POB level, right? It is, so if you want voice to go to a separate GL, and all that is done at a POB level. So, but over here for our understanding of the entire thing, I've clubbed together. And that makes it much more easier to understand, because the minute you break it, it comes to the same effect, but it is very difficult to understand. So 1680 is the transaction price. That is $70 per month for 24 months. The period is 24 months. And I've taken the SSP of 1200. And we've done the allocation out of 100%. And this is the allocated, the relative SSP, as they call it, or you can call it allocation. So when you divide 1193.75, when you divide it by 24, the amount you get is 49.74. So actually, the amount revenue to be recognized in the first month. So this is in period 0. That is, the customer has gone, taken the phone, signed up the contract. So immediately he pays 230 and he pays $70 for the service. That is what he ends up paying. But we recognize 716 and we recognize 49.74. You got how I got 49.74? So I divided 1193.75. So now we've understood this allocation, right? And I've divided the 1193.75 because this is a clubbed amount by 24, because it's 24 periods. So I get 49.74. So I generally don't present these two columns when I'm presenting, but I mean, you all have to understand how did we go about calculating this, right? So it calculates a contract asset of 486.25. So the system sees, the system sees that the revenue is recognized more than invoiced. And so the overall, it gauges the overall feel of the contract, and it says that this is going to be a contract asset. So it says 486.25. The revenue that we are recognizing is 716.25 minus the cash flow of 230, which brings us to a contract asset of 486.25. At the same time, we also recognize 49.74, right? So at this point of time, when we are recognizing 49.74, you can say we are either, like, look at this. This is in period 1. We are either subtracting the contract liability or amortizing the contract asset, whatever the case may be. At the end of the day, recognizing these amounts per month, we have to bring the contract asset down to 0. Just what Krishna was mentioning, right? I mean, you were talking to this only, right, Krishna? That's what I understood.
Yes, Shilpi, correct.
So at the end of the day, this is how it is calculated. Now, what are the accounting entries? We'll go to the accounting entries, but are we clear on this table? This table, because this table we could we could manage up to a certain extent. So up to a certain extent, when a discount came, we put in a second POB, then, some other subscription came, so we put in a third POB, and we played around with this table for some time. And this is the table where we usually do, match all our amounts, whether they're fine or not. But it just gets very complicated when contract modifications come in. And at that point of time, there was a point of time when we couldn't do this Excel sheet anymore. So, but if you've understood this concept of CACL and all that, calculation, allocation, and I'll show you in the system, the system is really, we are not ready with the system yet, but I'll show you in the system how to see what is the allocation that is done, what is the SSP, how can you figure out on what basis has the system given some kind of entries, the GL entries that are created, what is the basis for that? So the system itself, the tables itself, if you know it, you will be able to gauge that and understand why is it happening. And this is a time-based contract. This is a typical time-based contract. So your phone company will keep charging you, whether they've invoiced you or not. Maybe they invoice you once in 3 months, once, in a year, whatever. They recognize the revenue per month. This is a typical time-based contract. And this is a typical telecom contract. So let's go to the...
So in this column 0, so 1680 in the contract asset.
Yeah.
So what is that 1680?
Oh, no. 1680 is not the contract asset. So like I kind of... 1680 is the amount that...
contract price.
Yeah. It's the contract price. It's...
And 1193, that is in contract liability. What is that?
So contract liability is that whatever we've invoiced minus whatever we've recognized. So you see for the for this for services, not the product. The product is the phone. For this, we have 1910 minus the sum of E4 and E5, which is E4 and E5 here. So it is taking the total transaction price minus whatever we have recognized.
No, that is okay. Still not understand. Maybe if somebody is understand, please explain me. What is contract asset? Which amount goes to contract asset? Which amount goes to contract liability? From each POB perspective. It's not the contract perspective I'm asking.
From each POB perspective, 716.25 is your receivable. How much money have you received till now? 230. Don't get confused between contract asset and like the term contract asset is confusing.
No, yeah, so let me come to, so right now I'm working whatever the deferred revenue and receivable concept, okay, which is classic RAR, we call SPRAR, okay. So there, whatever the contract amount, which is needs to be amortized, I agree that the contract level, it's not a POB level. So overall the contract level amount is going to be posted in a deferred revenue. When it is posted in a deferred revenue and each month while you are recognizing, the deferred revenue get amortized to until 0 as per contract. Okay. Do you agree on that or not?
We are talking about deferred revenue,
which is not RAR component. I'm talking about a SD component, which is in current SAP.
Row number 4 and row number 6 has the 2 POBs, right? Actually, so if we put that accounting entries, I think it will resolve our doubts.
Yeah.
So still because I'm confusing there only, so contract asset and contract liability. So where is the total amount then in that case? So receiving receivable means, what does that mean, receivable?
Receivable is because how much has the customer paid? The customer has paid
The
230.
customer needs to pay entire amount. It's contract amount, entire amount he will pay, maybe today, maybe later.
Yeah. So maybe later. So the customer will pay, when the customer pays the entire amount and everything, it will come to zero at the end of 24 months.
But this, whatever this one, like every payment document, we are not matching with this amortization schedule, right? As you said, only invoice is the matter for us. Payment is not matter for us. So invoice means when our contract is signed and when POB is performed as a performance obligation, then we start our revenue recognition. We don't look for customer paid or not. Am I right?
Here, okay. So over here, Mahaseva, over here in this example, we are making an assumption that we are going to invoice every month. The minute you do not invoice the customer, your receivables become more. So it will add on to your contract asset. Because you
Since it is invoice, Siva, so that column M, it is showing cash flow, that is monthly invoice, that $70, whatever it is. So monthly, so phone usage charges or something, actually network provider, actually, so he will bill for $70. That is actually referred as cash flow, I think.
That is got it. So that is a cash flow. Now my question is that contract asset. So which means there is a contract price, as she said. Okay, contract price is going to be reduced or whatever it may be according to the cash flow or something. I got it.
Okay.
Contract liability, there is 1193.75.
Yeah.
Right?
Yeah.
From where that money is coming, so there is a 3 POBs, like 2 POBs. Remaining 2 POBs are zero value. So they are okay, even though like a 4 POBs or something, that 1193.75. Is it a contract level or is it a POB level?
It is for the services. It is at 3 POB level.
Means contract level, right?
Yeah.
So now overall contract is in contract liability, you mean to say, right?
No. Yeah, I get your question. So you're saying when contract liability is more, why do we have the overall as contract asset? It should actually be contract liability. That is what is your question?
Yes. So because what I understand from the concept is, it's for general concept. So when POB contract price is after allocation, allocated amount, if allocated amount is lesser than the contract price, that goes to contract asset, or higher if it is goes to contract liability or something. So then when I come to know here, the contract price is 230, but relative SSP, which is relative SSP, is 716 in one POB and 1193 in one POB. So 1193 is SSP 1200 and 1680, and this is allocated to 1193. It is a lesser amount, you mean to say, right?
Yeah, I'll tell you over here, this was my confusion too initially. So what happens is at period zero, there's nothing called period zero in accounting, but over here we tend to call it period. I mean, we used to call it period zero when the transaction happens. So in period zero, the system says there is a receivable of 486.25, which has not come from the customer, but the customer should have paid. Why? Because the customer has paid only 230, but we are saying that our revenue for that in period zero is 716.25 for the phone.
Okay.
And at the same time, we are saying at that point of time, the customer paid 70, but the customer should have paid only 49.74. So the system gauges the overall this of the contract and says there is a contract asset of 486.25. And this starts getting amortized over the life of the contract. And you will see how the contract liability also. So the contract liability is of 20.26. You can call it amortization of, so you realize how it's 20.26, right? Because 1193.75 divided by 24. Divided by 24 is 49.74. Just round it up to 49.74. So the difference is equals to 70 minus this amount, because 70 is 20.26. So either you can call it as a contract liability over here, or you can say it is an amortization to contract asset. This is at the contract level. So whether you have contract liability or contract asset, your ultimate calculations are at contract level. It brings it to zero at the end of the contract. And the revenue that gets recognized is 1910. So it is, see, that this is it. Like GAAP recognizes 1900, GAAP recognizes 300 straight away, right? In period 0. It recognizes 230 plus 70 straight away. In period 0, IFRS 15 recognizes 716. It recognizes 716.5 plus 49.74. That's what it recognizes. And then that's the contract asset calculation, because the receivable is much more than what you've really received.
What will be the accounting entries actually passed at the first month? Because
Yeah,
actually
so
that you can show, then it will
become more clear, no? Okay, let's so I prepared this. Can you all see account, or you can see sales account, because I've taken these to show you all. I wanted to put the same condition types. So PR00, okay? And I took some GL accounts from our system right now, and I just put it just to give you all an idea. So we have the first neutralizing entry will be IC2RA. So over here, we will first negate the 230. 230 is completely negated. Now comes the RAR part of it. RAR will say that we have RA to RV, which is 230. This is according to PR00. This is according to the transaction price that has come in the order. And then because of allocation, we are recognizing more amount. So the core effect, this core transaction type, condition type is an RAR only. It will be RA to RV. So now you see RV is revenue recognized. So now you see RV and RV totally is 486.25 plus 230, which is 716.25 as per our table over here. That is your first entry at period 0. And then the recognition program runs and calculates the contract asset amount. The contract asset amount is at that point of time, because what we've received from the customer is 230. What we've given to the customer is the phone, which is worth 716.25. But the customer has paid only 230. So the rest becomes a contract asset amount of 486.25, which will get amortized over the life of the contract and make it 0 at the end of the contract.
So coming to the contract asset account 486. So it has to be come from the customer, right? So then it should be a liability, right? How it could be a contract asset?
Because we are going to be receiving it, right? Liability is, so when we have fulfilled our part. We had to give a phone to the customer for $716. We have fulfilled our part. Now it becomes a conditional right to receive for us. For us, it is a right to receive. The customer should be giving it to us.
Okay.
So,
So right to receive. Okay. Okay.
yeah. And I focus on conditional right to receive. I will explain the conditional and unconditional
Okay.
later.
Okay. Got it. Right to receive. Okay. Okay.
Yes, because we have done our part. We have fulfilled it. We've given the customer the phone. The customer has not paid us 486. That is what we create as a contract asset. So in services, we have 70 over here. That is the neutralizing entry, right? IC to RA is the neutralizing entry. So we do RA to RV, which is we are recognizing the $70. But now we have to do, remember our amount over here that we had to recognize was 49.74. It wasn't $70. That means we have to reduce our revenue. This is a liability. We have to reduce our revenue. So here the system passes an entry RV to RA of 20.26. And you see, this entry is for your running RA balance.
Yeah. Again here. Sorry. It is also right to receive. Right? Is it contract means?
No,
But
in fact,
service hasn't delivered. Is that the meaning?
no.
Their service is already delivered, and here service is not yet delivered. Is that the meaning? Means like it is going to.
Right. Yes. See, because this customer has given $70 to you, but you have recognized, but they should have.
No, I'm not asking the
$20.
20 amount. I'm asking about the total amount, 1,000. Sorry, something is.
1683. Right.
Yeah.
Huh? Something happened?
No. Okay. So it hasn't delivered. It has to be delivered in the coming month. So this is called. That's why liability, and
Yeah.
that is
The customer has
already delivered, and it has to become. So that's why it is called asset. Okay.
right.
Okay.
Yeah. And this is how even I take it, Mahasiva. I think of what has happened over here because till date, one has to think about, oh, this is it. The customer still has to pay us more. So it is an asset. I still do it in a few contracts when I'm analyzing a contract. So over here, the customer has paid us 70, but the customer had to pay us only 50. That means we owe the customer something. We owe the customer $20 worth of something. That is why it becomes a contract liability. And
Realistically, it's not a woe, right? We are adjusting in some other POV, right?
yes, realistically, yeah, that is what we do. So we actually, and that's the allocation. So we subtract it over here with core effect, and then it gets amortized from the CA. So your CA has a balance of 486.25, right? It has a balance of 486.25. And we are amortizing it every month, 20.26. So this keeps on decreasing, which is running your RA balance. And this receivable adjustment account over here is decreasing your contract liability. Here it is cancelling against your CA balance. At the end of the day, your RA comes to zero.
So the receivables adjustment account is so that is called as contract liability, or there is no contract liability over here?
There is a contract liability which we are showing with core. So the contract asset and contract liability. So here I'll explain this. So we earned 230 from the customer, but we were supposed to get 760. We got 70. So we were supposed to get 230. We got 230, but we were supposed to get 716. So this becomes a contract asset, right? And the difference, this is CA. The difference between these two is what goes as a contract asset, 486.25. And CL is we received 70, but we were supposed to get 49.74. So the difference over here, which is CL, because the customer gave us more, the customer gave us 20.26 more. The difference goes as a contract liability. But we are over here, the system has calculated the contract asset for the entire contract. So when we have the entries and when it does the revenue program, it creates a CA entry. So it says CA to RA is 486. So in CA account, it becomes 486.25. And then it keeps decreasing this RA to CA, it keeps decreasing this 20.26. And that is the amortization.
But we are not calling it as contract liability in this accounting documents.
Yes, that is
No.
the concept finally, Murli. So
Yeah.
it's
Okay.
adjustment. It is coming from the other POB. So there is no
Right.
contract liability. If you see in this here,
Hmm.
it is adjustment only.
Yeah, that actually, so in our accounting language, the receivables adjustment account, we have to call it as a contract liability.
Thing from the perspective of other POB. There is no contract liability, right? Shilpi, where is the contract liability amount here?
No, it is not. It is not, because we are doing it at a contract level. We are not doing it at a
POB
line
level.
item POB
Yeah.
level.
If you do, if you complete it as POB level, then it will be zero. So contract asset and liability both will be there. If it is at contract.
And then, you have these entries which are showing CA separate, CL separate, and it gets so confusing, especially when there are there are some contracts where we have literally, I'm not kidding you, 760 lines and 760 POBs. And in 760 POBs, the allocation and where did it go wrong? Just figuring that out is such a painful process. When it is at a contract level, it becomes very good.
Okay, finally, actually, the receivable adjustment account, whatever the other leg is, that is almost a contract liability. Okay, we are calling it as differently. Okay.
So
when you have
whatever the old method and new method, both are one and same from accounting standpoint.
Yeah,
Only thing is how the revenue is recognized is different.
Different, correct.
In the first case, maybe based on our want to increase the share price, we can do anything. But when IFRS came into picture now, it has to be in a streamlined manner we need to do. There is no
that
other
is Krishna, actually. So this is mainly for segmental reporting.
Right.
Actually, everybody is doing. So handsets, they are giving it free of cost. If you take Geo or someone, they are giving it free of cost, and in the monthly revenue, they are
correct
clearing it off. Okay, so that is what actually. So standard is saying that actually first year, actually, instead of you declare losses, so progressively you have to do that.
Correct. Normally, companies will do in fourth quarter. They put all the expenses and kind of declare losses, right?
Yeah.
So this is what negating that. Yeah.
Yeah. So actually, this negates the manipulations that companies do. Even the said segment reporting and all, everything at the end of it, the COPA grid structure is there. Your reporting is there, and this is the system is standard throughout the world. But even in this, there is some kind of manipulations happening, because every company is struggling to live with that IFRS 15 reporting. So over here, I wanted to show you the period 0. Our period 0, the revenue recognized that we have recognized is 486.25 plus 49.74. 535.99. And the contract asset is 486.25 minus 20.26, which is 465.99. And the sales is 230 and 70, which is what gap is, right? But this is, even when you go to do the calculations, this is a complicated thing. And when you see those numbers in, your tables and how the entries are getting posted, you just get it.
Once we go to system, actually, if we create one contract and play with that, actually, so then everybody will be understanding easily.
Yes. Now the example which you showed is the POB calculation at the contract level is first point. In the previous sessions, we also see that the contract asset and liabilities are calculated at the POB level.
Yeah.
Correct. So can we have at least one the same for the same entry which you are showing us? It is very clear for us, for me. And if you can put in the same format for at POB level, if that is possible, then we can have we can see what is contract asset and contract liability.
You want me to put this one at POB level?
Because there are two types right now. We have seen the POB calculation at the contract level, which you have shown us the example.
Yeah. So why I have taken this at a contract level is because the number of variables and the way you calculate to show you the difference that these kind of calculations should be done at a contract level. So and when you have at a POB level, that is when your structure is flat. You are not calculating like this. So your invoice and everything is coming. You're creating a contract asset. You're creating a contract liability for the other POB, but it all gets cleared in 1 month. And it's over. It's done with. So it's not that you're taking it and you're amortizing it over a period of time. There are hardly any contracts that get into amortizations over a period of time. But when you have amortization in this, you should be taking it at a contract level. That's the training part of it. Like, because tomorrow when you are designing the system, you'll be taking all this into consideration. So when you know that this is how it is going to be and there are going to be contracts for 24 months, then you might as well do your contract asset and contract liability calculation at POB level. At contract level.
Is there any criteria for that? Like these should be go to POB level, they should go to contract level only?
No.
FRS?
That is a setting in RAR, but it is a setting at a, you cannot change it for different POBs. So once you've set it in that client, saying this is how it is going to be calculated at contract level, then that's it. All the contracts go at contract level then.
Okay, any experience which kind of industry goes for POB level?
So POB level is mostly like your software. So the current project that I am in, we are not manufacturers of anything. So we take our products. The customers give us the products. They order the products. We take it from the vendors and we drop ship to the customer. The vendors do it directly. So those, and the second kind of revenue that we have. So it's a very flat structure, So if a customer orders 7 products, we take it from the vendor, it goes to the customer, done. I mean, really, whatever CACL has to be calculated, if allocation has to be done, it's done immediately. Service revenue, and in this kind of environment, even if you get all the kinds of revenue into the system, that is also okay. You don't even have to get into IFRS 15 relevant or not. So services, and our company provides services to the customer. So they take contracts for the whole year. They'll take a contract and then they'll provide different kind of services. We have engineers and all who go and, so we charge them for the resources like that. So though that is also, it's a kind of flat structure. We say, fine, what has the customer consumed this month? And then we invoice the customer. It's mostly event-based. We don't even, time-based is hardly anything. Those are the companies we go for PO at POB level. And that too, if we went at a contract level, it would have been better. But no, the client insisted on that. We said, okay. This Excel sheet, I'll send it to you all.
Yes, please. Yeah.
Like, go through this, like really go through this, play around with the numbers over here and understand this part. This is a very important part. Really understand the calculations over here. And I'll see if I can, once we have the system up, if we can, our first contract can be something like this only, if I can set that up. Because we'll have to do it through the sample, the FARD sample. And FARD sample is like, an Excel upload. So let's see how much can be managed through that. I don't know. They're saying that BRF plus also will be a problem. So even if we don't go to BRF plus as such, that I'll show you. BRF plus is a very important part. So we'll cover that entire thing thoroughly on how
Who is saying that BRF plus have a problem?
The system, in the system, like the BRF plus, it has to be connected. A lot of arrangements have to be done. No, RAR is not.
ZaranTech is not supporting on that perspective?
No, ZaranTech is really doing everything that they can.
Okay.
Today, I think we spent a couple of hours trying to, get the process running, the system. ZaranTech is really trying. They're very fast with everything. So this, and you can see the accounting consequences here. This is the same accounting entry, the consequences that we've created, and the entry. This I created today morning, just to show you all what are the entries. So IC to RA, RA to RV, RA to RV core is important to be understood, and the CA over here. And there's another concept. The contract asset is a conditional right to receive. What is the condition? The condition is on the basis of fulfillment and allocation. When there are times when you have the system doesn't create a contract asset. The balance is sitting in RA. And that is when there is an unconditional right to receive. That is, we've done the work, the fulfillment is completely done, the invoice has to be given by the customer has to make the payment. So unconditional right to receive is actually the RA balance. It's only when there is an allocation, we create a contract asset. Contract asset is the conditional right to receive. It's a concept, and I'm picking it up because, you all are accountants, and with, I think, minimum number of years of experience that I heard on the first day was some 10 years. So everyone over here is experienced. So this also will come. In fact, I have another Excel sheet where I've shown the movement of invoice. You know, when we do complete invoice with the booking, when invoice comes after the booking, when it comes before SDFI, when it comes after SDFI, I have an Excel sheet. I wanted to kind of show it today, but I thought first let's get comfortable with this concept. So then we'll see that effect and we'll come to conditional right to receive and unconditional right to receive. And I'll send the URDR also.
Yeah, Shilpi. So here we are saying that this recognition is at contract level because
Yeah.
we are taking into consideration the sum of all the POBs and then we are taking the weightage. That is why it is a contract level. So
Yeah.
we have taken 1910 as a base, right? For
Yes.
allocating all the thing. And
Mm.
we don't need the working of all this, but at a high level, in case we take POB, at POB level we do the RA. In that case, what would be the base? And just a formula, is there any difference between the POB level RA and the contract level RA?
Not really. Then what you'll end up here, we just club the whole thing because then it becomes easier. But otherwise, for each POB if you're showing, because over here we've just taken a $70, we've clubbed up the amount, right? But maybe your voice is $40 and your text is $15 and voice, text and data is 15. So
Okay.
so we have 40, 15, 15. And over there, we will calculate the TP separately, SSP separately. That what is the SSP of it? We will allocate separately. And this 20.26 will get broken down into different levels of contract liability.
Okay, in that case also we are deriving the contract asset and contract liability, and that procedure itself is again a contract level calculation. I'm just confused about the contract level asset and liabilities and POB level. What is the difference between POB level? Because it is a one-time configuration, and we should be knowing the difference between a contract level asset and liability and at the POB level, so that we can take a decision at the time of configuration.
So yeah, that's right. So this is the phone, okay? This is the phone. This is voice, data, and text. Now I'm doing it at POB level, okay? So the SSP for this is 720. We took the SSP as 50, right? So 30, 10, 10. Let's take the SSP as this. And then the allocation will become 770 and 300. So the allocation over here will become 280.52. And similarly, what did I do? C19 by C23. So this is your allocated amount. Okay. So when you pass an entry, it will become IC to RA, IC to RA 280.51. So 230 is the cost of the phone. We've taken the SSP to be 720. So the allocated amount is 280.52. At the same time, 40, 15, and 15. So I've taken voice as 40. We're charging the customer data 15 and text 15. So now the SSP for this, I've taken 40, 10, 10. So now we made an entry. Okay, so over here, your contract asset becomes
50 or 49 point
minus this 50.52. And
okay.
right. So for this one, we will pass an entry for contract. For these three, we will pass an entry for contract liability. So there will be separate entries. So when we pass an entry, we have over here CA to RA, right? So we will do CA to RA 50.52 and we will do RA to CL 28.31, 11.10 and 11.10. That's how it will go. So if you do it at a POB level, it has to be for each month, each POB. Definitely not advisable for this kind of a contract. So this concept is a little difficult to grasp. I mean, if you've grasped it, it's amazing. It does get a little difficult to grasp. So the system is not yet ready. For today, I had prepared these two things. I prepared URDR and I prepared this Excel sheet. Because over here, see your event, this is called the event-based POB. And this is the time-based POB. Event-based POB is fulfilled immediately. It is invoiced, it is fulfilled immediately. So you give the product and it is fulfilled. The time-based POB is over a period of time. And then we have POC. So how do you really, and over here, our SDFI and II is all defined over here. So we want the SDFI to be the revenue that the customer pays. So it is customer based and we are invoicing the customer. That is SDII. So I told you, like, there are three events in RAR: SDOI, SDFI, and SDII. SDFI and SDII, these are the fulfillment. The entire revenue recognition is around this. The SDOI is only the planned order. So when SDOI comes, the system comes to know that this much revenue is planned and this much revenue is, like, for over here, the system knows that there will be a planned revenue of 1910 and we've not taken the cost into consideration over here. But cost is a very simple thing, like we saw yesterday, it is CC to CJ and then CJ to CO. It is a very, very simple thing. It comes, it gets recognized and it gets negated. So cost is not a complicated thing. So it takes the planned cost into account. Now, if we've taken a cost of, say, $50, and when your SDFI and II come in, it depends on the POB type configuration. If you want, if you say that in POB type configuration, because my cost is big, I want MIRO to be my fulfillment item. That means when the MIRO is created in, after the purchase order, when GR happens, MIRO, when it is done, the SDFI will flow, and at that point of time, whatever is the cost in the SDFI, like 100. So then your planned cost gets wiped out completely and your cost now becomes 100. And this is what the system recognizes. This is what it shows in the revenue schedule. Then revenue schedule is also one thing that all of you all must know how to read it. Once, the RAR does have a lot of these elements, but once you know all this, then it becomes easier to as you go forward.
Alright, now let's test your knowledge. Here's a quick question for you. Which standard does SAP RAR primarily help companies comply with? Option A, IFRS 15. Option B, IFRS 16. Option C, GAAP 13. And option D, SOX. Now take a moment to think, and when you're ready, do type your correct answer in the comment section below.
Hey there, ready to master SAP RAR? Our course is your ticket to becoming a pro at managing revenue accounting and reporting. You can learn at your own pace right here on our platform. Throughout this course, you'll dive into SAP RAR, a powerful tool for handling all things revenue related, from tracking sales to generating reports. We cover it all, from the basics to advanced techniques, crafted by experts in the field. Your instructors are seasoned pros, dedicated to helping you grasp every concept and answering any questions you may have. And guess what? Our students love it. People just like you have found our course incredibly beneficial. The best part? It's budget friendly. You won't have to break the bank to gain this valuable knowledge. Ready to become a SAP RAR whiz? Enroll now. For more details, visit ZaranTech's website.
So let's see. In fact, I'll take you through the production system today because I wanted to take you through a proper use case, which is not really what I'm able to get over here. So in the standard system. So let's see a real use case scenario today. So it's a workbench and it's transportable. So if you've created it in like dev 100, so dev 110, 120, 130, all can use the same BRF plus. You don't have to define it for each system. So it's client, you can just put it in one client and it works for all the servers that are there in that client, and you can use them.
So sorry, Shilpi, it's work or is that the only option?
Sorry?
It's work or is that the only option? Means like I mean to say in SAP we have dev, quality, production, so or maybe in multiple qualities, multiple devs. So you are saying one BR plus can connect all these systems means, is that the only option or like we have an option for a quality in BR plus also?
No. It's not. It doesn't connect all the systems. It is connecting only dev. So for dev, it is 100, 110, 120, whatever variations are there. For quality, you have to transport from dev to quality. And in quality, whatever number of variations are there, it will work for those. So it's not like a configuration. Though it is transportable, it's not like a configuration. So it's not that you have to, you can send it only to quality QA 100 or QA, whatever, 110. So one BRF rule, BRF table works for all the variations of quality, like that. But from it is still transportable from dev to QA to prod. Okay. So BRF plus, we're going to talk about this BRF plus. BRF plus basically sits on the classes to define the classes, and it helps to connect the source systems. The source systems could be SAP, non-SAP to RAR. That is the functionality of BRF plus. Let's get into BRF plus integration now. So BRF plus is a standalone system. It creates the POB. Okay. Now suppose we are talking about the POB type. So we are saying hardware. Hardware should have certain characteristics. Hardware should have, a particular item category every time it's is created in SD, any sales order that is created, a particular billing type for hardware, whatever attributes are there. Now, when it comes to RAR, we want the system to recognize it as a hardware, to recognize a particular POB type. So suppose phones, okay, we've been taking all these, communication contracts, right? So in our case, we want, suppose phones. Our phones could be a POB type, but it could have different different variations under that. Like it could be iPhone 12, iPhone 11, iPhone XR, iPhone 8, 8 Plus, whatever. So all of these fall into one POB type. So when a line item comes from SD, we want RAR to recognize that as a POB type. We want it to recognize the hardware as a POB type. And so the phone as a POB type, sorry. So it will, we have to define a rule. We have to say, we have to say certain item categories, or, a typical, in the material master, we say this kind of material type or something else becomes a rule set. Those are the rules to create a POB and a contract. And we'll see this more in detail as we go ahead. Now, it serves a lot of uses, but frankly, BRF Plus as of today, we use it for two things. We use it for POB determination, and we use it for account determination. This is maximum usage of BRF Plus. You can have add-on POBs, you can have other things. We are not, most of the other things people don't use because people prefer to code them. But yeah, we'll go through what other uses can be put in BRF Plus. And consolidation and migrating usages are also taken into BRF Plus. So BRF Plus Workbench, the features of this is we have a workbench, we have a rules engine, and we have a rules repository. Again, like I said, we're going to get into a little technical. It's good to know that there is all this technical. It's good to know the system, right? So let's get into a little technical. But if you really want to do and learn BRF Plus, it can be built from the scratch, and that is like a 5-day course in SAP itself. So we're not going to touch upon all that. So BRF Plus Workbench, it provides a user interface in WebDynPro, and it encapsulates collaborative functionality for modeling, editing, and managing business rules, what I just told you. We don't need to install it. It all comes once we define the drivers and everything. It automatically gives us a template. We use the template to fill it in. We upload Excel sheets and it's all done. SAP has made it very, very easy. And now, with S4HANA, it has become a very easy thing to use. So all those horror stories that happened in version 1.1. After that, in 1.2, it started stabilizing quite a bit. So we use several settings that allow user to configure the one workbench. We're going to go through that, and the building blocks. So a full-blown public maintenance API for custom UIs is provided by SAP. And the simulation tool, that is a tool that you can use for yourselves as you're going through the support, because the end users are going to come saying, why is this not working? And when you actually run it in simulation, sometimes you realize that whatever rule that you've created is not enough. And so I'll show you, like there is a simulation tool. So this is the adopter reuse layer. Like ARL is where we define what is the distinct item, what are the different clauses, what is SSP, it depends on what you really want to show. Like, look at this. What I have over here is our system. For our this is what we use for my current project. So we have the item category. We've not defined SSP and all. We've decided that the drivers are going to be item category, sales document type, license type, which is in material master, contract key, which we've created in our this, but the product hierarchy and distribution format and all. All these will decide what is the POB type. So POB type is a cloud, POB type is software or a software bundle or a software license. So these are the different POB types that we've, and based on these drivers. So really SSP and everything is something that you can see if you really want to go and define all this. It really depends on what you want to define. But getting into SSP means getting into each material. One of the failed cases in RAR did that. They went and they defined each material in BRF Plus. BRF Plus should be as compact as possible because it's a lot of maintenance. But you have SAP in this, so in fact, these slides that I'm showing you, I've taken from the SAP training. They have that training from BRF Plus. I'd gone through that training. So I've taken screenshots from there and I've put it in this presentation. And so whatever attributes you define, those go to create a POB. And that is how the POB is created. So this is the SDOI. On SDOI, we have all these attributes, which I just showed you. We have the ZSO1, the sales document type, what is the material, what is the contract key, item category, material type, product hierarchy. So we've defined all that over here. And based on this, the system derives the POB type. So when I go over here, this is BRF Plus, the T code is BRF Plus. BRF Plus can be set up in the same SAP system, or it can be set up as a different, through Internet Explorer. It works both ways. So over here, we've defined these rules, the sales document type, the item category, license type. These will go and create the POB type over here, which leads to the next set of activities for that POB. So the ARL layer is what decides how the system is going to read and define the POB based on all the drivers that we define. And then the system decides how that POB has to be treated in the system. So, it's a distinct POB. I mentioned distinct and indistinct. What kind of COGS, what kind of cost of goods sold account should we take into consideration, whether we should be doing a net indicator and all that. It just decides based on the POB type. That's the crux of the matter here. So We are still seeing that, right? Sorry. We're going to keep juggling between the different systems, okay? So now we said BRF Plus has a BRF Plus workbench, and we're going to get into the details of the workbench. And then we said it also has the rules, the BRF Plus rules engine. The rules engine we saw, like customers can determine automatic combination of operational contracts in the BR, and the rules are defined in BR business rules engine. And which operational item should be managed as distinct POBs, which one should be managed as implicit. Like say, we can say that warranty. Now, every time people buy a phone, the 1-year warranty comes along with it. But warranty, we cannot create it as a distinct POB. It's like, if you see a POB called warranty, you will say, but that warranty has to be with the phone. So it's not a distinct POB. It is dependent on another POB. And we had discussed discount as an example when I picked up that topic earlier. So warranty can be defined as an implicit POB, and it can be set up in the system. It can be set up in the system over here. In BRF Plus, we can say that every time the phone is created, automatically create one more POB warranty. So that can be set that with this POB type, another POB has to be created. The system will automatically do it, even if it does not come from SD. So those kind of rules can be defined in BRF Plus. So creation of linked POBs for implicit obligations. This is what is defined in this table, where it determines the attributes of POB, which item is distinct, combination of contracts. Combination of contracts, I told you, if you remember, that all the contracts generally are combined by reference ID. So, and an RAR system, RAR automatically does that. So every time a line item comes, the system sees the reference ID. And based on the reference ID, it puts all the contracts, all the same kind of reference IDs into one contract. Like thousands of POBs are going to come on the same day. How does the system know which line items to take and combine them into one contract? That is by reference ID. So how is the combination going to happen can be defined in BRF Plus. So there are these different rules. We link implicit POB, determine the SSP. Different things can be done over here, and we create the rules for BRF Plus. Now let's discuss the data flow. The data flow for BRF Plus. BRF Plus has an input, it has an output which goes to the function and the rule set. So we've defined the rule set over here. We define different rules. How can it be, once your POB is derived, what should happen? How can account determination happen? And remember, it's not just for SD, it's also for other systems. So we're talking about CRM, FICA, everything will be giving in inputs over here, which goes into the function. Function goes to the rule sets and then throws an output via the function, and you have something called the result. Now what happens is the engine, it gives you, first of all the rules are told in advance. You can see that. So it brings about a lot of transparency. Like everything, if everything is in code, imagine, till date we struggle. We're like, if something goes wrong, we have to look for an ABAPA. Can you just debug this and tell us where is this stopping? What is happening in the code? And really we are dependent on the ABAPA. So all the rules that are defined over here brings about a lot of transparency. Everyone, even the business users, can read the BRF plus table and say, how is the system going to react when certain things happen? That is the kind of transparency it brings. And because of that, it brings in predictability of the application behavior. Like, how is the system really going to behave? Just what I just said right now. And frankly, it's really decreased the maintenance cost. BRF Plus is very easy to maintain. And these are just some of the advantages. And testing, right? Testing, initially, BRF Plus could require a lot of testing, but later on, all those tests just helps because we know how to define the POB types. We know how do we want the system to behave. So everything, these are the advantages of defining the BRF Plus system. The rules repository, and over here, the rules, they are implemented as expressions which are assigned. So all the rules are created as something called expressions. Now these are again technical terms, but good to know. So I am covering those. They are implemented as expressions which are assigned to a function through a rule set. And then it spits out the result over here. The rule input is known as the context, and the output is known as the result. And you'll hear a lot of this when the implementation is going on. You'll hear a lot of these terms being thrown at you, like SAP and all those people. They'll say the context is this, and that is why the result is this. So you would know that context is the input that we're giving in BRF Plus, and result is the output. So now application. The application is the leading key for several BRF objects, such as expressions, expression types, like each application. See, it's not created properly over here, but yeah. So all these are the applications. The applications could be from anywhere, right? The applications can be from the outer system. So the different applications that can be defined over here, that is application. Application is the leading key for other BRF Plus objects. What are the BRF Plus objects? The BRF Plus objects are, say, expression, rule set. These are the BRF Plus objects, the structures, the tables. The structures, tables, anyone ABAP over here? So we've got something called data dictionary. So structures, tables, all these are ABAP terms. We don't really have to know those, but structure is a set of fields, and that is something that is going to be used very often in BRF Plus. So the structure is important to know. So here, see, it's not completely defined. Like I was showing you the BRF Plus, right? Where we have all the rules and everything defined. Only one thing is defined over here, which is the geo, which is the driver, and the sales org is the result. So it's not really very well defined over here. Which are these? Have the different objects under it. So this is an application. Under this, there are different objects, which is what the system is telling you, which is what its statement is telling us. Has different components. So the application is the leading key. An application object is the container of different BRF Plus objects. It is a reflection of the particular system functionality that you want to enhance. Now you can enhance each application as you want to. If you want, like, what do you mean by enhance? Enhancement is if you want that additional POB to come, warranty. So that is an enhancement that you do at the application layer. So you say in DT process POB, that is in the decision table. In this structure, every time a POB is derived, the phone POB type phone is derived, I want the warranty POB automatically to kick in. So all these are done at a application layer level. That is an enhancement. Are you all with me? Any questions till now?
So Shilpi, actually, so if it is it may be business example you have told, but actually for warranty for a phone, actually that depends on from phone model to model and everything. At a time it will be changing, right? Sometimes it may be 1 month, 3 months, 6 months, like that.
Yeah.
So we cannot define it as a fixed POB, right? So it has to come from SD only generally.
I'm just giving you an example. Like, maybe you're running a Diwali, you're running a Diwali promotion. So you say that in Diwali time, everyone who buys a phone will get 50% discount. Or at Christmas time, over here, it's all at Christmas time in December that everyone gets maximum discount, or Thanksgiving. So I'm saying on Thanksgiving, whoever comes and takes the phone will get a full will get a 50% discount. And so that 50% discount can be enhanced at the application level. It can be, so we can put that any phone that comes, add on 50% discount, and that can be pulled away.
Period. So for this 1 month time or something, we can define it in
Yeah.
layer apply. Okay.
Yeah.
Got it.
So warranty is just an example I gave. Now, if you go into it, it might not be the best example, but iPhone generally comes, any iPhone you buy, it comes with a 1 year warranty, 1 year, warranty, right? So any iPhone automatically has that 1 year covered by Apple. That is a fact. So, and then you can buy more. So each customer can buy for 2 years, for 3 years, and then there is an additional cost. But that 1 year warranty comes with the phone. And whomever I buy it from, I can buy it from any other, any other communication partner. But the fact that it is an iPhone, I can go to Apple with that 1 year warranty. I think that is why I took that 1 year. At least over here, it is like that. I don't know. So this 1 year warranty, I'm sure. But yeah, then the customer can buy it. When the customer buys it and they're paying money, because the customer is going to be invoiced for it, at that point of time, it comes through SD. So then, and again, that is a good example of indistinct POB. Because just a phone coming as a POB, you will say, yeah, this is the right POB. But a warranty coming, you'll say warranty has to be on something. Warranty can't be on its own. So that is an indistinct POB. So the function, rule set, rules, expression type, all these are objects under the application. I know this can get a little technical, okay? And frankly, we don't even have to go so technical, but just good to understand, because even when I'd gone through this training, in SAP, initially BRF Plus, which our client had organized for all of us. I'd taken up the contract with TELUS, and they had organized this training. When they went through this, I was like, my mind was reeling. But because I went through that training, when I started working in the system, you do tend to get the connections. And that is where, even listening to all this helps. So even if it's technical, it's okay. It's good to know. And I'm covering only that part of technical, which is good to know. I'm not going deep into technical. So now we spoke about functions, rule, expression, action. So functions are the connection between the application code and the BRF code. So functions, we said, these are the connections. It carries a context and it carries a result. It carries all the rules. So that connects our SD system and RAR. Like all those drivers, item category, material type, those coming from the SD told RAR what kind of a POB type it is. So it serves, so those are the functions. Like I told you, function, the context and everything happens through the function. We saw that in the earlier slide here, right? And function, feeds into the rule set with different rules. It spits out the results as a result. A rule is known as a condition and two actions, true action and false action. So like I have something like this, okay? Now I'm saying when the contract key is something which only my project has, it has been created. It's a customized field. But even Apple will have its own contract keys, right? So I'm saying when item category is Z010 and the contract key is 42, the POB type should be cloud N. So I have defined this. Now, when something comes with Z010 and the contract key is 42, but item category is Z010, but your material type is, say, ZER1. So what will the system do? The system will say this is false and it will not be able to derive the POB. BRF plus is extremely, each rule over here is defined so that a POB is identified in the system. It is extremely important for all the POBs to be derived so that the system knows. Then the allocation and everything happens in RAR. That is then how that POB type has to be taken into consideration, how the revenue is recognized, all that happens. So this is the true and the false action. So when all this is there, the system will use this to create a POB type. Otherwise, it is false. So this is the true and false action that this this presentation is talking about. So now, and then it has expressions, which are the building blocks of a rule. And expressions may be nested. Like when we say expressions may be nested, over here, expressions, we say, this is the POB type, but we say like, okay, so in our system, we have something where we say that all the prices, all the rates come into the system in RAR in gross. So we say that because we are the agents, we are the middle people, we want a few things to be recognized in net. We don't want it to be recognized in gross. So we define, a net indicator. So this POB type, automatically the system says, okay, I have to calculate, I have to see the cost and the revenue both into consideration, and I have to post some other entries. So this is nested. So you can define different rules along with the main rule of POB types and the different stuff over here. That is called nested. And the action types are special expression types that define the interactive part of BRF plus. They do not have any output and perform actions based on the data. This is the different things that are happening in the system over here, the different objects that we've gone through. So this is the BRF plus, like, we saw this. We saw it's got the menu over here, and it's got the work area, which is called the navigation panel. So let's see this. This is called the navigation panel, and this is called the work area. Now, yeah, we'll go to the presentation and we'll come to that part. And over here, we can even work in simple mode and expert mode. Now, what is a simple and expert mode? So when I say simple mode, so simple mode is the user interactive mode. Okay, like I'm saying I want a simple mode so that I don't have to, so everything becomes simple. Like the tools over here is only simulation, workbench. You see the system over here is so simple. I can read everything, expression, decision table. The minute I make this expert mode, remember the simple and expert, because you might have to go into expert mode at times. See, everything changes. Look at the tools that we have over here that were in there earlier. Earlier we had only simulation. So the different options, like look at this, it becomes more complicated to even read. So that is what we have, different modes over here. So this is the navigation panel, and this is the work area. And you can create all the workbench operations over here. So you can say that you're creating the application, you're showing what are the objects in the repository. Repository is the same thing, okay? This is the repository. So my applications, I can create some structures as my favorites, and then I can go to those structures every time I get into it. What are the tools? Tools depends on the UI mode that you choose, simple or expert, which I just showed you. So application usage. Application usage is, you can use this tool to query the applications that are being used. So now I don't know, my application I'm using is not going to be SD only, right? It's going to be BRIM, it's going to be CRM, it's going to be others. So what application am I using over here? You can go to the application usage and you can see. So you're not, and why I'm showing you all this is so that you're not dependent on ABAPers and others. You know where to go and look at what should you look at to get your answers, So then you have a debugger, you have dictionary usage, application cleanup, which says you can delete the unused objects. You can, insert new rules or new criteria wherever you want to. You can analyze and check the consistency of all the BRF plus objects in a transport request over here, the transport analysis. So the different tools that you can use comes in the expert mode. So the menu options, the different, we saw help pane. Help pane is help pane is the help center over here. So it gives you access to the help center, which, you have the frequently asked questions, you create a link, you can have some learning content over here, so that if you want the end users to kind of know certain things, you can put it in the learning content. So every time they come over here, they can kind of go there, they can see what are the options available to them, how does it work, whatever learning material you want to put over there. And in the navigation panel, we have repository, recently used, favorites, and catalogs. So here I can create my favorites. Like this is called a structure. So I want to add it to my favorites. Okay. So I do a right click on it. I add it to my favorites. Now, if I go to my favorites, I see the structure. So whatever you want, you can even put the application as your favorite, or you can put the structure. So you don't really have to go and, go through the notes every time. You have it in your favorite, come click over here, see the rules, you can do that. And you'll be doing that. You'll be doing a lot of that. BRF plus, for everything I keep going to BRF plus. But you can also export to Excel. So one thing over here is you can export to Excel. And this is the template that I'm showing you actually, This is how I upload it. I just upload this particular template. This is given by SAP. So I just upload, I make the changes in this Excel, I upload it, and then that's done. But what happens is when there are so many users, like I've just made a change. The users don't know. So the users go to the BRF Plus to check up. So if they go to BRF Plus, they can export to Excel, or sometimes when it's a small thing, they just check up over there. So because then, the version control doesn't have to be there. Otherwise, if so many users are doing it and you've got each time you've got to maintain the version control, it becomes a very difficult task. And so this is how we activate it. Now, what is a catalog? It simplifies the rules maintenance process for the business user by hiding the repository and displaying only the relevant objects. Like I just showed you, adding the structure to the favorites is a catalog. It's a catalog functionality. So this is something that the BRF Plus function features. And so it becomes easy and convenient to use. This is just a few features that make BRF Plus an easy tool to use. Now, there are some data objects, like you can create folders, you can create applications, you can create structures only, you can just create favorites. Everything that you see in the favorite folder in in our SAP, that is how even BRF Plus works. So that's what they're trying to show. Now, how the integration, like we know that BRF Plus is an integration between the business application and RAR. That is in the ARL layer. So this is 17. I'll come back to this. This is what we are saying over here. It is in the ARL layer. So once it comes into RAR, we have something called a processable item. So when items come in, they come in a processable format. Like this is a processable item. When I want to process it, okay, so let me select some items over here and process it. Everything's failed. So when I go there, I see it contains inconsistent data. Source account is missing, or something else is missing. So basically, it is not even able to give you the POB number. That is what is coming. So when I process it, this item is going to the BRF plus table and seeing if it has all the rules. You know, and this I want to show you in my system. You get an item, you get a line item. This line item comes in a processable form. And when you process it, it goes into BRF plus. It looks at all these rules and then creates a POB. When it creates a POB, it gives it a POB number. So there is a number range for POB and for RA contracts. And then it adds on all the POBs and gives it a contract number. When another line item comes with the same reference ID, the system knows that this has to be added to the existing contract 83336, and it will add it to this contract based on the reference ID. So all these rules, this is how it works. It comes as a processable item. We process it. Remember, this is important. When we are talking about the classes, we are not talking about STFI and STII. STFI and STII over here is fulfillment item, invoice item that is happening due to how we have defined our configuration. It is only the STOI item which is derived, which comes from ST and creates a revenue accounting contract based on the rules defined in BRF plus. So there are three classes that we have, okay? We have order items, we have fulfillment items, and we have invoice items. All over here, see, STOI, STFI, STII. Okay, these are the different classes that we have. Only the order items. This comes in from ST. The STFI and II comes, whether it's coming from ST, whether it's coming from other system, it is all defined in configuration. So when this comes, it comes as a processable item. I showed you what is processable. So it comes as processable items, okay? I did not put a limit. Now it will just go into a whole frenzy of so it comes as processable items. Till now, RAR doesn't know what it is. RAR doesn't understand what is that item. It is only when we process it, it goes into the BRF plus. It reads the rules. These are raw items, actually. Okay, so it comes, it reads the rules. So when we try to process it, it will read all these rules of material, sales document type. Based on all this, it comes to a POB number and it gives that RAI, it is called a RAI each line item. It gives that RAI a POB number. So it is only the order item, which is the class on which the BRF application sits. So your STOI could be coming from FICA, okay, which will be CDOI. It could be coming from CRM. Now, when it comes, only this one line item comes into RAR. The system doesn't know what it is. But when you process it, it goes to BRF plus. it sees all the rules over there. And what are the rules in BRF Plus? That based on item category, based on this, it should be defined as, suppose, cloud. Okay, we saw the cloud in my Excel sheet over there. So that is the POB type that it derives.
See, this one, the order items which you said, based on the, it means like rules which we determine in BRF plus, it brings in the POB material, it means like the material type in for SD01 line item for order item. But
Yeah.
you said there is another fulfillment and invoice item. So what about those? So you said two differences between these order items and fulfillment items. The account determination happens.
So fulfillment item and invoice items are fulfillment items and invoice items come based on the configuration.
Configuration in BRF plus?
No, configuration. So we are going to, our next class is going to be on configuration. So that is based on the configuration on how do you want the fulfillment to happen. So like, is it an event-based POB? If it is an event-based POB, the configuration should happen. And we have to define that in configuration. So all that, and how should the fulfillment happen? The fulfillment will be manual, or the fulfillment, like, let me tell you about my current system. In my current system, we have two kinds of fulfillment. One is through customer invoice and one is through time cards. So when resources go for a company like TCS, it could be time cards, because all your resources would be working on a project. And when we are charging the client, so if you're supposed to be spending 100 hours, suppose, with a client, you're going to charge on a per hour basis. So you fill up the time card saying, I've done 40 hours this week. So when those time cards come in, that is a fulfillment item, because TCS will say, okay, I can charge the customer based on this, and this is showing that we have fulfilled from our part. So STFI and II will get into that concept some other time, okay? Right, that is another concept. So SDOI. Now let me show you the what we were seeing at that point of time, and I'll show you this to you again. So that's when you will. So here, so this is the SD order, okay? This is the SD order. So based on from the SD order, I have and from the SD order and the material master, based on the material that we've defined over here, we got this line item 10 as one SDOI. How does the system know that this SDOI has to be treated in a certain way? The system doesn't know. So when we process it over here, it goes into BRF Plus, it sees all the rules, and at that point of time, it derives what kind of a POB type this is. So if you go to a contract, this is a POB type hardware. It is a distinct POB. You can see different things over here. So it has now derived a POB type. So because it has derived that POB type, it knows how to do the account determination. It knows how to treat it, whether this is an event-based POB or time-based POB. It has understood everything now. And that beginning comes from BRF Plus.
Showed us only, it means like in your Excel sheet, the POB type, which is determining from your BRF Plus. And you also, it means like you said, we can also get another attributes like your event based and other things from the BRF Plus. Can you just at least tell us what all the basic attributes which will be determined from your BRF Plus to your
So
contract.
The BRF plus takes determines your POB type. Okay. Now the this POB type, whether it is an event-based POB, what should it be? What is the event type? And we'll get into these concepts tomorrow, right? All this is defined in configuration. So the system, so what BRF Plus is doing is, it is recognizing this as a POB type and says that this is the fulfillment type that I'm going to take and this is the event type I'm going to take, because this is coming from the configuration already. And based on that, we've already defined in configuration all this. It is going to be a distinct POB and what cost of sales and everything that we define in BRF. When a line item comes based on the attributes, that is based on the material, based on the material, the different drivers, based on, the different drivers over here, the system decides what POB type it is. And based on that, the system says, oh, this is a hardware. So now it knows what to do with the hardware because we've configured what to do with the hardware. We've shown what account should it take, what is the account determination rule it should follow. So everything is based on that account that the rule that is created in BRF plus.
So, Siddhi, what I understand is like when the RA item comes, the order item comes, it goes and refers into BRF plus and fetches the it means like POB type. And next, when invoice item and fulfillment item come, it means like the account determination happens from your configuration.
Yes.
So is that only BRF plus determines the POB type? For that purpose only we are maintaining in BRF plus, or do we also use for another purpose?
Yeah, so we use it for account determination. We use it for POB determination and account determination are the main things. Besides that, we have that additional POB and all that. We can use it, but POB derivation and account determination are two of the most critical activities for which BRF Plus is used. Did I make this full screen? Not really, no? Can you all see full screen?
Yes.
Okay, then it's okay. So look at this, okay? I have an SDOI. It's got a header ID. It does not have a POB number, but it's got all these characteristics. So let me try processing this. I hope it doesn't become an error. See, it derived a main class and condition item, and we'll get into this tomorrow. What is a main class condition item? I'm going to get into configuration tomorrow. So, oh, we should have taken 10,045 because once we close this, it will go away. It has based on this. So just now when I processed it, no, it went to BRF plus and it saw the rules and it said whether this is processable or not. And it said, oh, I found this rule. That is fine. And so it gave us this, but I've chosen only processable item. So let me go and show you that. And see, we just did it. We just processed this. So it did not have a POB number. The system read this. It read all these attributes from the BRF plus and gave it a POB number and a RA contract number. Now, if I click on the RA contract, it derives the POB type. This is also a hardware. It happens to be a hardware. So it's a hardware POB type. And now how should FI and II be treated is already for hardware is defined in the configuration. So we've already defined, and I'll take you through that cycle. That's a different cycle. But what is the role of BRF plus? Did you understand now?
Yes, to some extent, I see.
So right now, actually, so we are using BRF plus to identify the performance obligation type.
Yes. To understand the POB, what POB it is, POB type, and then based on that, a lot of other things, other things come into the picture. But what is the role that BRF plus is playing is important over here.
When you process this line item, it has showed us main item, main condition, and condition item, right? So this POB type comes under main condition or item?
No. So the POB type is, there is main item and condition item. So
Correct.
Each main item has certain characteristics. Condition item is only the condition type that each line item has. So like, so over here we have ZPRO and ZSSP, but it will come with ZPRS also. So I told you ZPRO, ZSSP and ZPRS. So that is condition item and then the main item. But so tomorrow when we are discussing the configuration, we will come to this. What is main item? What is condition item? Then POB type, how do we define fulfillment and all that? We'll see those different examples. However, when you saw this, what we did, this was a processable item. We took that processable item and we processed it. This line item went to BRF plus. It read in BRF plus, it read what is the based on these attributes, what POB type should it derive? It derived a POB type as hardware, and now the system knows that for this hardware, what all is it going to really do? For this hardware, it knows now how should I be taking in the fulfillment item? How should I be recognizing the revenue? What is the account determination rule? Everything is based on this now. So the POB is identified because of the rules that we defined in BRF plus. If it is not there, here, let me show you actually in this system itself, because here I'll in my system, I'll have to search. So if I run these, I'll process these, I'm sure I'll get 1 or 2 POB. See, all of them is failed. See, required field fulfillment type is empty. Required field event type is empty. Source account is missing. All these this means it is not able to read the POB because there is no rule for this in the BRF plus. That's what it means. So it's not been defined properly. So every line item, and this is a processable item. So every line item comes in this processable format. When we process it based on the features it has, based on the attributes that have been defined, which is going to be defined by you all. So you all are going to be interacting with the customer and the project team and deciding what should be the drivers, like what are the distinguishing factor. When we had to create it, we said item category should be one of the factors and the material type. So we defined what are the distinguishing factors over here to come to a particular POB type. We said software will always have the contract key this, license type this, material type this, and it could be item category these. Then it is a software. So it has to be distinguishing, right? Otherwise, how will the system know? System will get confused. So how it reads it, how BRF Plus reads it reads it line by line. It goes to the first line, it says no, these attributes are not over here. It goes to the second line, no. Third, fourth, fifth, and then it comes, oh, I found it. So this is a software. Oh, this is a hardware. That way. So system always reads it line by line. But it's very important for you all to understand what BRF Plus is doing.
So this entire table will be, so we have to maintain decision table?
Yes, and this is what the support team is going to do. Not just that, this table is going to undergo lots of changes as you even after go live. This will be the table which will undergo maximum changes. Your configurations are going to be standard. Configuration is not much. So this table you all will have to maintain. And you cannot have 50 people maintaining this table. Otherwise it goes crazy. You'll have 2 to 3 people maintaining this table because this is a configuration change. And this table has to be done big time by support team.
So this will be maintained directly in production system, or actually so every time they have to make the transport?
No. I at least whatever projects I've been in, we've always done it is dev, QA, and prod.
Okay, because we can test it. Okay.
Yeah. So, as I make this change over here in this table, then I test it because I've just made a change. Then I test if that POB is getting processed. I realize something is missing only when a POB is not getting processed, right? When I get that error, I see that POB is not defined. So then I come over here. So how that works is you go to the system, you get a POB error, then you see what all attributes are there. So then you see whether the attributes are right, or so do we need to change these attributes somewhere, or do we need to change it in the BRF Plus? If you decide it's BRF Plus, then you make those change in Excel sheet and then see if that POB is getting derived and then move it to QA and prod. If you feel that it's something is wrong with the data, then you go and tell the SD team saying your material type is not right, or whatever you've used is not right, and you have to. So really this ends up bringing about a lot of changes in the material master. We've gone back and made changes in the material product hierarchy and all that. We've made changes that created a lot of hassles, but that way is at least you're ensuring that the system is right. So this is that is how critical BRF Plus is. But BRF Plus is not scary. Like earlier it used to be that big scare of BRF Plus. So I wanted to tell you all that it is just a table. Okay, you have rule sets and you have all these, but seriously, don't even get bogged down by all that. All that is also really not something that should be, that you would get troubled with. All you need to know is where is the application, what is the change, how can I check, how can I simulate, and then create your favorites. Every time you come to the favorites, you'll be able to see. So this timed out on us. every time you come to the favorites, you'll be able to see and BRF Plus is maintained. It's really, there's nothing scary about BRF Plus. But it's just that you have to understand the concept. Actually, RAR, no, that is why SAP is controlling it so much, because FICO and all, you have trainers everywhere, right? RAR is a concept that is not easy to grasp. So everyone takes time to grasp it. And when you really start doing it in the system and you see an end-to-end process, even that time, but when you keep doing it, suddenly you're able to put everything that you've seen, you'll be able to put it together. And that is why SAP is controlling that RAR should not be going out just like that, because half-baked information is more dangerous than anything else. And there are so many people who have done projects, but who cannot explain so many concepts. And that is because it is half-baked information. So all this, you have to understand why BRF Plus, and as a support team, BRF Plus is going to be the biggest thing. We are actually at 10:30, so I'm going to now jump to account determination, okay? Because I want to show you that account determination is one more part of BRF Plus that is a very, very important part. And I'm going to go to, so here, we are talking about the context and result. And I've told you all the main things in BRF Plus. So I've told you about the objects. Don't get into too much technical. I have put some information over here. All that is really not going to help much. As long as you understand what is an expression, what is an application, so what is an application? What is a structure? You go to expression. In expression, you go to the decision table, and this is a structure. This is where you define all the rules. Here, nothing is defined. This is where you define all the rules, and the BRF Plus is created. This is the table that the system reads. As long as you know that, everything else, expert mode, simple mode, these are good to know. What you need to know is this: how to add it to your favorites, how to see the application. Because initially when you go, how will you even know what to put over there to come to the system? So how to see the application, exporting to Excel, and uploading from Excel. Those are the only things that you really need to know as functional consultants. And understand that SDOI is getting created and recognized by all the rules in the BRF Plus table.
The application which you said we can create, no? So applications, it should be whether one application or based on, again, on requirement, we can create multiple applications and restrict our items like the configuration or whatever the things to a specific application only. So here you have created Z sales organization application, right? So if I don't want to include or have another separate set of calculation, so can I create one more new application and have two applications in place and check my BRF, restrict my BRF to go to this application and fetch all the details?
No, you can't do it. I mean, I don't have understood your question properly. You can't do it individually. So it's not that each user can decide which application to use. That is decided at the project level. So the project level decides which is the application, and which structure should have all the rules. So, and then all the users have to use that application.
Okay. Now, at what levels these applications are created? It means like there might be some. It means like for this, you have one application. So you have created like, see, you have created 3 applications, right? So the purpose would have been different, but it means as a standard you can have multiple applications. So I wanted to understand for how many types it means like for the applications are created and the calculations in a standard.
Yeah, the standard is the application is created for POB derivation and for count determination. That is the standard, nothing else. Like applications over here, so applications mostly are 2 applications for which you use BRF plus. Those are the standard applications. And see, so you come to a repository of my application. I have created favorites. So I go to favorites.
And this is what I am looking for. LPC, you have process SDRA item, POB status template. So why are these applications are created? So I just wanted to understand like for what reasons we have multiple applications.
So your reason, so when you have FICA, you'll have 2-3 more applications for FICA. So when you have CRM, you'll have 2-3 more applications for CRM. So your reasons could be, so what is BRF plus doing again? You know, I'll again, it's a revision so that you'll be able to connect. BRF plus is integrating, it's an integrating application. So it is integrating your source systems to RAR. So what is it? What are the applications that we need over here? With the number of the systems that you have. Over here, we are still talking CRM, we are still talking SAP, right? We are talking FICA, we are still talking SAP. But you can also have non-SAP systems integrating with RAR. And
so you mean to say for if we have multiple system, more than one system, like if we are integrating with FICA, we can have one application for FICA exclusively where account determination happens for FICA. And if it is coming from SD, we can have one more application where account determination and RAs, everything will be determined in another application. Is that what you are, it means like?
Perfect, Kumar. You got it. Yes, that is exactly what I'm saying. So yeah, you've understood that. So, you know, the more you can just decide what applications to have. Generally, you know, you don't create too many applications. You create, like you over here, you have SD POB determination over here. You have POB determination and you have account determination. So you just have 2 determinations, 2 applications over here. You're not even we are not even using a third application. We've got to keep it simple. And this happens at the project level. It cannot be at user level, the user deciding that I want 2-3 applications or I want only 1 application. No. The user can decide what to put in their favorites, the ones that they use. That is all that the user decides. This is decided at project level. So now let me get to account determination. Now, account determination, what is the main reason for account determination? Again, we are talking about external systems and internal systems, right? So we say, what is the first entry that happens when it comes to RAR? Can you all tell me what is the first entry that happens?
Reverses the original entry of SD, right? That is what.
Yes, absolutely. So when it comes into RAR, the first thing that the system does is it reverses the original entry. So the original entry, it says, I'm going to reverse the invoice correction and I'm going to hold that amount in RA till I determine how should I be recognizing the revenue. So now, based on hardware, based on the POB type, okay, generally, and I'm showing you generally, you can also do it based on something else. But if you remember, Shiva, I'm not trying to point out to you, but you had asked that question, initially, and when we had touched upon BRF plus, and I told you that generally it happens at POB type level. So that is because your account determination rules that we are defining, we can define at POB type level. So generally, that is what the projects decide. You can decide it at any level. The actual GL determination, it happens at POB level. It does not happen at POB type level. It happens at each line item level. That is the account determination. But the rules that we create in BRF Plus is created at POB type level. So for all hardwares, what should be my contract asset? Okay, forget contract asset and all. I'm going to go to recognized revenue. So what is the main thing over here? Again, remember BRF Plus is the integration point between a source system and between RAR. So what does it do? It has a reference account, and it has a reference account over here, and it has a derived account over here. So we are saying when you see a revenue accounting item which has the, which is posting to 611200, in RAR accounts, it should post to 613070. So from SD, the revenue is getting posted in SD to 611200. So the system sees, oh, the revenue recognition is posting to this. So what does it do? The first entry is IC to RA. It reverses the revenue in 611200 and rebooks that revenue to 613070, because these are the RAR accounts. And when it posts to 613070, it does it with, the allocation, the core effect, like for the phone. Like let us take the phone example. Okay, our example is 230. So for $230 for the phone, so 230 is what we've charged the customer, right? So what will the system do? It will come into RAR and it will first reverse 230 in 611200. But now when it books to 613070, it will book a core revenue, because we have the contract asset revenue. Remember, we've got our receivable, we've got our contract asset, we've got our contract asset clearing. All that will come into picture in these RAR revenue. Another thing about BRF Plus that I forgot to mention is, whatever are the drivers is always in gray. When you activate it, this turns to green. So this is important, because as you're doing it and you're showing it even to business, so you make the change and you see whether this has turned to green. So when you activate it, it turns to green. There is an activate button which will come when you edit it. And when you activate, it turns to green, it's successful.
So first, actually, what you are telling is actually we have to reverse the SD account document, right? So whatever the document it is posted from SD, first that is the thing actually we have to post. So that means actually, are we reversing in only in RAR actually, or it will not be reversed in SD side, right?
It is the GL document, no? So when you reverse it in RAR, when you reverse it to 61, see, the SD revenue has posted to 612110. So when you reverse it to 612110 and you're posting it to the GL effect of that revenue becomes 0, no? Then you are reposting it to 612110. So over here they've kept the same thing. Okay. But over here, so you're reposting it to 613070, which is an RAR account. So that now the system, so when you report, and that is the revenue that gets published, and especially for, for all the public companies, it's so important that that's the revenue that gets posted, and that's the revenue that the auditors come and audit. So this is what are the RAR accounts that you see where the revenue gets posted. And
Okay, so first document actually what we are telling is actually so that 611100 when it is posted actually, so when it is the document is processed in RAR or before coming to RAR it will be posted in FI.
it is posted in FI. So when a customer is invoiced,
Okay.
immediately it goes to AR, no? So when the customer is invoiced, we have the AR saying we are going to receive so much of payment from this customer, right? So
Right.
$500 from a customer, we are going to receive $500. AR has that document saying this customer is going to pay $500 in, according to whatever payment terms. But in RAR, we are saying that whatever revenue has been posted to 612110, that has to get reversed completely. And we are going to now post it to this RAR account. See, sales hardware. So we're going to now post it to 613070, and we'll post it according to our rules, according to IFRS 15 requirements, basically. How IFRS 15 wants, no? Because of the allocations, and they want to see the revenue in different ways, right? So we now take all those things into consideration. But that is the main thing in account determination. So in account determination, and that's why I showed you recognized revenue. We define the contract asset GL. We define the contract liability. You can define it for different POB types. You can define it for whatever. But in our business, the people wanted it according to company code. So that is how we did it. Deferred cost, deferred revenue, receivable adjustment. But main thing is your recognized cost, because this is again your connection between outer systems and RAR. So even in FICA, here it's only SD, right? But even FICA, you're going to define over here saying whatever, now when we're integrating FICA and when we're integrating CRM, we want to take the revenue from those systems and we want to show it according to IFRS 15 standards. So we are going to define what account over there when the system sees, the system now knows that this is a hardware. Before even it comes to posting this, the system knows it's hardware. But for that hardware, we define that if it sees 611200, it should post all the revenues to 613070. That is how the system is now integrating your router systems into RAR and doing the account determination postings. So this is the big role that BRF Plus plays, huh? And BRF Plus is going to be a big support thing. And we'll do it ourselves, right? I hope I'm able to set up the system to that extent, because you see, I mean, like, look at everything over here, we've had a full technical team. This implementation was done by Ernst & Young. So they had a full-fledged technical team and we were able to create it. So I don't know to what extent I'll be able to create. I will take help of a technical person and all that. But to what extent we can create in a training system. And that is why you see the training system, it's, we saw the BRF plus, it's so, but anyways, I mean, training is not supposed to be teaching you your job. It tells you what and what does it do? What is BRF plus? What does it do? So now when you get into your systems, you'll be able to connect and you'll be able to see how are we using, what are the drivers we are using, how can we change those drivers, those, what is it, and what are the different rules, a whole lot of things. Like BRF plus is a very high involvement table that you'll be going to again and again. But again, it's not a scary thing. So please, BRF plus, the minute every job requirement has full knowledge of BRF plus does not require so much of knowledge also for the functional person. And we'll come to these even again, okay? Like we discussed in the beginning of the presentation, we will come to this again because this, and then you'll be able to really see this process. How is it working? So what is, did you all get it? Like, did you all understand the BRF plus today? What is it doing? What are the features? What are the advantages? And it's more bookish knowledge. I can do only this, or frankly, I can take you through one example to show you what is really happening in BRF plus. And I decided because really what you need to know is the practical example and see how is BRF plus used. This is what there are YouTube videos on BRF plus. A special code version can be generated that supports the runtime traces. These things, and we've put that in the presentation only because, I mean, you should have this literature. But frankly, these things are just a lot of theory. If you want, we can go through each and every slide in detail. But whatever was important, I did cover it. And I feel that, because since you all are going to be supporting it, it's so important for you to understand the flow. When a RAI item comes, based on what drivers, what features, how is it deriving a POB, what are the different applications, those are the things you really need to understand about BRF plus. Everything else is just, it's a transportable, local content is supported as transportable content. It can be stored client dependent or independent. All this is theory. Seriously, you all can go through this theory. We can go through all more questions that you have.
All right, now let's test your knowledge. Here's a quick question for you. Which module is typically integrated with SAP RAR to capture sales transactions? Option A, SAP MM, Materials Management. Option B, SAP SD, Sales and Distribution. Option C, SAP PM, Plant Maintenance. And option D, SAP HR, Human Resources. Now take a moment to think, and when you're ready, do type your correct answer in the comment section below.
Hey there, ready to master SAP RAR? Our course is your ticket to becoming a pro at managing revenue accounting and reporting. You can learn at your own pace right here on our platform. Throughout this course, you'll dive into SAP RAR, a powerful tool for handling all things revenue related, from tracking sales to generating reports. We cover it all, from the basics to advanced techniques, crafted by experts in the field. Your instructors are seasoned pros, dedicated to helping you grasp every concept and answering any questions you may have. And guess what? Our students love it. People just like you have found our course incredibly beneficial. The best part? It's budget friendly. You won't have to break the bank to gain this valuable knowledge. Ready to become a SAP RAR whiz? Enroll now. For more details, visit ZaranTech's website.
Now, the entire configuration for RAR, not for SDIC. SDIC, the integration component is different. But for RAR per se, we do all the configuration in FAR_IMG, which is FARR_IMG. Everything in RAR is with FAR. You'll see FAR Raimon, the import structures, the BRF applications. There's FAR everywhere. FARD posting, the tables are all with FAR. Everything is with FAR. That's how it goes in RAR. So inbound processing is the first thing that we look at. And inbound processing contains items, item management, archiving and deletion is okay. But over here, we start with interface components. Now, what are these interface components? Classes I did cover. We'll cover a little bit today again. And then we go to item management. And item management, what really happens in item management is, we have the BRF applications, ARL. So inbound processing begins with these import structures, classes, everything to move the rise or move the line items which become rise in RAR. So here it's saying import structure. Now this thing you'll see it coming up again and again, and this comes up again and again only to stress on the fact that here we have all the rules. We have all the rules moving to move a line item from SD or any other application. It's not just SD, any other operational system into a RAI. Now, when it comes as a line item in RAR, when we process it, it goes to the BRF plus, which is sitting in the ARL layer. The ARL layer has your import structures, it has the BRF plus rules, it has everything defined over here to create a RAI. To even the status of the item, which we are going to discuss, you will see everything happens in ARL layer. So ARL layer has the rules to create a line item into a RAI in RAR. Again, a line item is called a RAI in RAR. It's just called RAIs, and that's how everyone talks. That's the language everyone talks. So even when you're dealing with SAP, Bramasol, you'll see people saying RAIs. The SDFI RAI and the SDII RAI, and RAI only means a line item, but it's called a RAI. So it results, so revenue recognition relevant transactions result in RAIs creation. The class for RAIs determines the technical properties. So what do you mean by this? The class, what are the three classes that we had discussed when we in our last class? Do you remember? So we have order RAI class, fulfillment RAIs, and invoice items. See, so the three, okay. So the three classes that we have are order item, fulfillment item, and invoice item. These are the different RAI classes, the class type, okay? So these are the different classes that are sitting on the SD structure. And these generate complete revenue accounting contract in RAR. The order item forms a shell of the contract. So let me just explain these. So what the order item does is, the order item gets created when a line item is created in SD. when an order gets created in SD, it creates an order item in RAR. That order item creates a shell saying that, let me show that to you as well. So it creates a shell saying, how is this RAI going to be? You know, like how is this contract going to be? Let me take this one today. Okay. So, you know, it says what is going to be the price of this. So there is a price that it has a SSP. And if I go to this POB, and I'll show you all this, how to do it. I'm just kind of trying to show you what is a shell that gets created. From an order item, the system determines what is going to be the contract price, what is going to be the allocated amount. So you'll see all the POBs over here, and you'll see the allocated amounts over here. So you'll know that this is how the system is allocating. On what basis is it allocating? It is allocating on the basis of SSP ratio. And we've gone through those Excel sheets. So once we have more examples, and once we start going through more examples, you will see the allocation, and we can do the calculation again and see if our understanding is according to that. And based on this, the system creates a revenue schedule. This revenue schedule is big to understand the contract. So it gives you, it says the revenue for this item is going to be 230 euros. And it gives you a cost as well. If there is a cost, I've not put a cost over here for this one, but so it will show you what is the revenue, what is the cost. If it is a time-based POB, if you remember, like I gave you a Netflix example, said regardless, Netflix, suppose a person pays in advance, or he pays at the end of 12 months, and he's paying suppose 1200. Now, regardless whether he doesn't see it, it's not based on usage. It is based on month to month. We are going to recognize revenue from Netflix, which is $100. And so it will give you a full revenue schedule over here, saying how is it going to recognize revenue and how much is it going to recognize each month. Like everything is explained in this revenue schedule. And as you start recognizing it on month-to-month basis, this yellow turns to green, and it shows that, okay, you've recognized it. That is how it is. That is how it forms a shell. Now, all this is formed, if you see, from order items. This is just one POB. If there were more POBs, it would take all the POBs into consideration, and it will say, it would allocate the amounts, and then the system would show you how much is going to be the revenue and the cost for one particular month, for each month. And that's how everything is explained. Like this is the shell that it has created. When the fulfillment items and the invoice items come in, that is when the system understands how much cost to recognize, and it calibrates. Suppose I'm saying that the cost per month for my revenue schedule, the cost per month or the revenue per month is going to be 230. But your invoice item for the customer invoice comes in, say, for about $500. So the system recalibrates and says, okay, the revenue is 500. So the cost should be according to the revenue over here. And it recalibrates and assigns the different costs over here. And all these are coming from some tables, okay? We're going to see the tables because if you all are supporting, if you're going to be the Go Live support, you're going to have a lot of these issues where you're going to see, the cost coming in, but the cost is not rightly done, or say the invoice, the revenue is getting captured only in the next month when the IC entry was in this month. So lots of issues come. So what are the tables that we're going to visit? We'll go to all that slowly. But this is just to give you all an idea on what is the shell that we are talking about. So the class again, now you'll all understand this much better. The class is SDOI, SDFI, and SDII. SD is because, we've been taking it from SD. But if it is from a different system, like if it's from FICA, FICA, then you'll have CAOI, CAFI, and CAII. But idea being the order items, fulfillment items, and invoice items are the three classes that RAR recognizes to complete the revenue contract. So now you understand this better. Now, the rise status, each item comes in raw form in the system and moves to a processable form. Now, the monitor, how we've set up in the monitor is the processable form. So you see, raw, the minute you have anything raw, this is the raw status. So when items come in raw status, they look like this. They're always in error because the way we configure the system, processable is how it comes into the system. And at that point of time, RAR doesn't recognize that RAI. When it is a processable RAI, RAR doesn't really recognize it. When you process it, that is when this goes to ARL, it goes to BRF plus table, it reads the rules and it derives a POB number and an RAR contract number. That is when RAR says that this is a proper RAI. It's only when you process it. That is the key. Okay. So this is just to show you raw, processable, and processed. Now, for raw items, the enrich, raw works with enrich and processable works with enhance. So you can put in a lot of validations and checks, like if I'm getting an item from some other system besides SD. Like in my current project, we're getting items from Financial Force. There's another system called Financial Force. So when items come from Financial Force through interface, that is when the system, we've put all these validations and checks saying, the system, if it does not have a VPRS, then stop it. If it doesn't have a SSP, then stop it over here and create an error. So lots of validations that we have in place. Those are enrich. So there is something called enrich body. Enrich body, you're going to hear a lot, even as in support, even during implementation, you're just going to be hearing enrich body. So one of the main functions in enrich body is check before save, where the system goes and checks everything that has been marked just before saving the contract. So raw item is associated with enrich and processable is for enhancement. So whatever enhancements you want to do to the customer fields and everything, that comes with processable items, and then you have processed items. And when they're processed, they're called processed items, what we have over here. So this is raw, processed, and all of them are processed because I've processed all of these in import structures or of a RAI that you'll see. But in the configurations, and we're going to see that, we define that we want all the items as raw or processable. In fact, Apple has S/4HANA 2020. So 1909 and 2020 has something called optimized monitor and optimized processing. And what it does is there is no raw and there's no processable. So it's straight away, when I create an order in SD, it gives me a contract in RAR that is optimized. And that is something that's new in S4HANA. It's new in SAP. SAP is very, very aggressively marketing it. So, and you're going to hear this a lot, optimized, because that's one of the latest.
What is that optimized CP? Sorry.
So optimized is like, see, the system that you see over here, you see these raw and processable, processed, and I'm explaining these to you, right? So what optimized does is, so as soon as an order item is created, it comes over here as processable. If it's an error and some basic things have not been met, it will sit in raw. So when optimized is, it creates something, you create an order in SD, and it straight away creates a contract. It will give you a contract number and POB number in RAR. Everything is in place. So that is optimized.
Does that
So
mean at this moment, so it just until the processed, it won't generate or it won't propose any contract number, right? Contract number or POBs?
Yes. Yes.
Okay, in future they are going to be proposed even before the contract created. Is that the statement correct?
No, slightly. The only change, it is 90% correct. The only change is that it will straight away, as soon as a contract is created in SD, it will straight away create a contract in RAR. So right now, what, and I'll tell you the difference. Right now we have batch processes. So all these rice come in and sit. And then we have batch processes that run in everyday night, or however we've set it up for everyday night. It will change processable to processed. Optimized is, you don't even have to set up those batch processes. Everything is happening in the background and you already have this.
Okay, so they are making real time SLT concept like a system.
Yeah.
Immediately means like you don't need to process manually or through jobs or something.
Yeah, exactly. So you don't have to do even batch processing for all this. It'll just be done. And optimized, I don't know about the ABC run. I still have to learn about that. But even ABC run and everything, we have everything in batch processing right now. So
on that case, this RAI monitor is going to be take off, or like they still want to keep this RAI monitor?
Oh no, RAI monitor is there. RAI monitor, in fact, at all times, it gives you everything. It will show you for each contract. Right now, I'm testing a lot, right? So I'm kind of just creating order items, and I'm just doing everything. But soon you'll see we can create it for each. We can create it for we can see for each contract what is the status. Have the fulfillment items come? When did they come? So you can see the 2 invoice items came, say in December, and 3 invoices came in February. So you can see every time the customer was invoiced, when did the fulfillment items come, how was the cost recognized. So monitor is always going to be there. At least till now, I think monitor will always be there. But I don't know what SAP will come up with next. But yeah, monitor gives you a full status on each contract. What is the billing plan? How is the customer going to be, how is the customer going to be charged? All the details are in the monitor. And the monitor just doesn't have this, okay? It has so many other things, like, see, it has the item number. It has a lot of details. I've not set this up. I'll set this up soon. I'm still working on this. So revenue class, the header ID, what is the reference ID, the customer details, company code. And if you go to change layout, you'll see the different, the billing party, the bill plan mostly. Currency is okay, but you can also add things over here. So, like, whatever enhancements you do, you can even add the fields over here. So you can see the different fields on what GL accounts it is posting to, a lot of other information that you can put over here. So monitor is a very, very useful tool. And you always start with the monitor. Whatever you do, you always start with the monitor. Even your basic processing of RISE, finding out the errors, what is the problem in a certain contract, everything starts with the monitor. So I took a lot of help with this, okay? I can, so FI I can explain. So the FI is, creating a company code, currency, company assignment and all that all of us know, right? But SD, I actually, ZaranTech provided a consultant who would do SD, MM. He created a plant. He did the SD orders and SD organizational structure and all that. And I'm going to take you through RAR configuration for sure. Like, see, my favorite, I would add one or two more. The only thing that really matters, which you can't remember, is the reports over here. But otherwise, the transaction codes are not too many over here. The inbound processing, in fact, you all want to see the configuration. No, this is all inbound processing. So all these, I've started the configuration part of it. So after I go through why, like, see, and at these questions, no, even when I go for interviews, I answer these questions. They ask about interface components, what are classes, how do you, so your understanding, like even later when you're supporting or going through the implementation, what is happening where, your understanding of that has to be complete. So it's not just seeing the transaction. In RAR, the backend and understanding the full picture is very important. And that's why I started with this. So I'm showing it to you in SAP also. And of the full cycle, we are not going to do just one or two contracts. We're going to do many. So yeah, I think we should first go through the configuration, no? Because today you'll see so many consultants out there who do not really understand what is happening. They will not even be able to explain allocations very well to you, because they've dived into the system. The system understanding, we all know SAP. I can show you what is FARDIMON and how to process, and you'll be able to process. That is, anybody can do that. But if you're going to support it, you need to understand the back end of what is happening and how does this entire RAR system work, and go into different tables. Otherwise, otherwise we're just going to cover, like, anyone can go and do a FB03 transaction code. Anybody can run a FBL3 in transaction code. But there is so much that goes in to create that FBL3, and what is really happening in the backend, that how do you want to read FBL3 in is what is important to understand FI. And that is what RAR, all this is important. So let's cover the configuration, okay? And I'll try to cover it as soon as possible. And from the next class onwards, you can even start practicing every day. So you can go into the system, you can, and try the system, because now the configurations are there. So you can do many things. And the RAI class determines the technical attributes. We saw the RAI classes, the order items, fulfillment items, invoice items, and it decides in which database tables you're supposed to store it. Now, again, this is important to understand. Every line item that comes into RAR goes through staging tables, okay? So and I'm going to go through the tables now. I'm going to go through all the staging tables. So let's go to 16N. Yeah, okay. So the staging tables are, yeah, here it is. One, okay, this is important. So one array, and you'll be going a lot to these tables. Like, you know, whether you are during implementation, post, for support, for reporting, these tables, you'll be going a lot to these tables, okay? So let me first tell you about these tables. Now, SDOI, okay, I'm still in SDOI. SDOI has, so you see the nomenclature here, you see one array, then you see ST01, okay, and 0 MI. 0 MI is raw items, okay? 2 MI is processable items, it becomes MI, and 4 MI is processed items. That is how it goes. So 0 MI is items for class SD01 raw data. The items over, the data over here is not static. So the data comes over here. Like if I do this, I think we have 2 raw items, right? You have, so data comes over here. When it becomes processable, it will go to the processable table. And when it gets processed, it will go to the 4 MI table. Now, in this optimized scenario, you know, when SAP was even demonstrating it, where you have the optimized solution today, it will, what it does is, there are a lot of raw items that get stuck. So because they are in error. So when you run these tables, the staging tables, you'll see some items that are over here in error, setting in the error, then some are setting in processable, and the processed are the ones that are processed completely. So that is fine. This did not execute. No, I wonder why. So it comes to these staging tables. Oh, there it goes. It's executed it and it's come to this. So we have 2 raw items. Now these 2 raw items, they were sitting in error. If we remove the errors, it will get into processable and it will move. So the idea is that raw item and processable item should actually never have any items. That is the ideal situation. Okay. So,
So Shilpi, so any item sitting in raw, that means actually it has some errors. That's all, is it?
yeah, actually any item sitting in raw, because as how we process it is, how we configure is that we want it in processable. I don't know in optimized how do they configure it, okay? But in 1909 and below, or 1809 and below, you configure items to come in as processable. So if they are in raw, they are definitely in error. And even in processable, you know, processable is also a temporary stamp. So over there also, you should not have dry items for too long. So you have like we have batch processing jobs. So fine, items are getting created throughout the day. And when it processes, everything should go away from there. Ideally, it should be empty. What really remains behind are the ones which are in error. So then you see that in processable, but these are staging tables. Please remember, these staging tables are very, very important. And just the way you have SDOI, you have SF. So you have SD 02, 0 MI, 2 MI, and 4 MI. And then you have SD03. So the classes are SD01 order items, SD02 fulfillment item, SD03 processable items. So processed items. Sorry, invoice items. Okay, this is it. So we've just discussed this. Order item, fulfillment item, invoice item are the 3 class types that you have, and we've seen these 3 class types. So coming to configuration part of it, okay? So we define the interface components here. We don't really define any interface components. Interface components, okay, this got stuck again. No. So these are your interface components: basic condition items, basic main items, basic MI01, MI02. All these are standard. These are standard SAP. These structures have all the basic functionalities that are needed to create the RISE and process the RISE in RAR. But these are given by SAP. It is only the customer fields which are important to us, because that's where we make the enhancements, which are the extensibility structures. And we'll come to that. We'll come to that in our current presentation only. So these are the interface components. It's all set up by the technical team. And then we create the revenue, the item classes over here. The functional team does this. We create the order item, fulfillment item, and everything over here. And then in case you want the customer fields to be added to order item or fulfillment item, they're done over here. Then behind, whenever the system creates these structures, and these structures, those interface components, they're assigned to the classes. The system behind that, it creates an API structure. And the API structure is required for all the RAI items that are getting created in the system. So all this is happening in the background. And you'll hear SAP talk about API structure. You'll hear, as they are going through the implementation, you'll hear them talking about API structures. You'll hear them talking about classes is a very general thing that they talk about. So these are what it is. So we create the classes. This is done by the functional consultant, and then we generate them. So this is all customization. This is all configuration. So once you do this and you generate it, when you generate it, you release it. This is the release. So it is released for test use. So when you, sometimes what happens is, RISE are not getting created. So one of the common T code to go to is SM58, and you'll see that this has stopped. So all you have to do is come, regenerate it again. It will again start working. And once it is released, it will start working again. So that is one of the common issues that you face in production.
So it is Shilpi, it is like actually COPA operating structure, actually what we release in each and every environment. We have to do it in production also, we have to generate and release it, or how it is?
Yeah. So the COPA grid structures, so RAR takes the COPA grid from SD. So whatever COPA grid SD takes, RAR also takes it. So it depends on how the RISE are flowing in. Now, if the RISE are flowing...
My question is not that one. Actually, so you are releasing the structure right now. So in production system also, we have to release this.
Yes. These classes, yeah. Okay. These classes, this is not transportable. This is released in each system individually. So this is released in dev individually, QA, and production. Did I answer your question, Krishna?
Yeah, my question is actually, so SD01, suppose say order item it is you have provided, you have done the configuration, so the transport moves from quality to production like that. But each environment we have to generate and release the order classes, is it?
Yes. These are environment based. They are not transportable.
Okay.
So you'll see, yeah. In our current project, they've kept it transportable, and they've said that you generate it, and so you can do it transportable too. But SAP says let the system not depend, like let these classes not depend, because otherwise something breaks in QA and I cannot even do anything in dev. So SAP suggests that. In my other projects we did not, but in my current project we do have it as transportable. So it can be transportable too. Okay, if that answers your question. So
Yeah, correct. Okay.
yeah, and then we assign the upload rules to revenue accounting. So we say create items as processable. So over here, see, I'm saying for all the classes, we have to create the items as processable revenue accounting items. We do not want to create it as raw, because raw items have to be transferred to processable. All that let the system do in the background. It will come to the monitor as processable, and we will run a batch job and process those. So you define that over here. This setting will be different and optimized. I'm sure it will be different and optimized. So define modifiable fields. This is whatever fields you want to make it modifiable. I've not yet defined anything over here, but you can define currency fields. So when you start, working in the system, you'll find sometimes there are line items where you have to change the currency manually, or you want to change something else manually. So you can define those fields over here and say these need to be changed. So this is the define modifiable, and all this is under inbound processing revenue accounting items. So we went from class to that, but basically now you understand the class well, right? Because we've gone through a lot of the class. Now this is the imports interface components. Again, we don't really have to get into I don't know. I can study this, but there's no need. This is a standard SAP. This is done by the technical team. As functional consultants, we never ever have to go into it and what does it mean. So really that's not really helping. But if you want, I can actually study through it and come and we can have a discussion on it. Not required though. So item class types. ARL provides the interface components for the import of contract information. And we know that ARL also has the business rules. So it provides the interface components. Everything is happening again, like I told you, in ARL in between, right? That was the first slide that we saw. Everything is happening over here. So it has the interface components. It has the BRF plus. So this is what is processing a line item to become a RAI. And it contains the structure of all fields. Based on all the structures that are defined, the system in the backend creates APIs. And RAI classes can be created by selecting the right interface components. So we define like you see over here. So we define basic fields for order items, okay, and conditions. I've not yet explained to you what are main items and conditions. I'll explain that to you. Or let me explain this to you, then you'll understand that better. So each item over here has main item and condition item. So we have main item and condition item. All the line items, SDOI, SDFI, and SDII will come. And I'm saying SD because I'm taking SD for granted, but when it's FICA, it'll be CAOI and all that, okay? So SDOI, this is a line item. It has come in with the conditions PR00 and SSP. Let's see, it'll show the amounts also. I'm going to get that in. Yeah. So see, it's got the amounts also. So each of these come with a condition type, each line item. So you can select a line item and go to the condition item, it will show you what are the conditions that have come with it. So these are called condition items and these are called main items. The main items over here give you all the different information. What is the material? What is the contract number, POB number? You know, if a contract is in error, has it been processed? And the different stuff over here. Like in my current project, I'll tell you, one of the enhancements that we just completed, in fact, because we were getting all the amounts in gross. So we are, the middlemen. So if you order a computer from us, we will suppose buy that computer from, say, Dell. Okay, Microsoft. We'll go to Microsoft and buy a computer. So we are buying the computer from there and we are selling it to you. So we wanted to identify revenues in net. We said we can't be doing this manually because we are selling the computer to you for 1,000, but we are buying it from Microsoft for 600. So we are making only $400 in between. So we wanted to show the $400 as the net revenue in our GL account so that when we run the GL accounts, all we see is the net revenue. We don't have to do too many manual calculations. So what we did was we said what kind of POB types will have the net indicator. Over there, the system will pass off the other journal entries to recognize revenue net. And we had it all over here. So you could see a line item, you can scroll in front and see, oh, it has a net indicator. What are the GL accounts it is posting to? So these are the customer fields. Why I'm trying to give you that example is to tell you that any kind of fields that you want can be added over here. This is the flexibility that the monitor gives you. And SAP gives you, right? I mean, at the end. So this is the main item and this is the condition item. This is going to be again all the time. So the staging table is also main item and condition item. So when we went to the staging tables, I did not go to the condition item, but see, the staging table is item for class SD01 raw data, but this is the main item. If I want to go to the condition item, it is the same numbering system. Okay. So I go to CO, and I say okay, and it will show me all the condition items. See, we had two main items. For each main item, we have two condition items, PR00 and SSP. So we have 4 condition items and we are in raw items, right? So if you see in our analysis table, monitor, we have 2 items that are sitting in error, which is raw. So these 2 came up in our main item table and each of these have 2 condition items, PR00 and SSP, which you can see in the staging table over here. Are you all able to see the connection? I'm trying to connect everything and show you the different tables. Is
Yes,
this?
Shilpi. Okay. Yeah.
Okay.
One thing actually is Shilpi. So PR0, PR00 and SSP both you are showing in main items, in condition items also. So PR0 as well as SSP both comes from SD order?
Yes.
Okay.
Yes. So in fact, generally in SD order, we get 3 condition types. PR00, which is the price or the transaction price, SSP, which is standalone selling price, and the cost, VPRS. So the cost also comes, okay? So here I'm like still testing, and I was sitting with Bramasol consultants and we finished the BRF plus and all that. So it's activating and all that. It's a lot of work, but so we're just playing around, and that's why you see a lot of bad data here. But you'll soon see contracts and everything. I'll take you through that. So
Okay.
this,
This is Kumar.
yeah.
So anything, any field which is not available in the main item, it means like if customer wants an additional item which is not available in the standard one, then he has to customize his body and add that field in the main item. Or
So
whatever the standard gives, that should be sufficient for across the clients.
right. Yes. The standard, what you get is mostly sufficient. Okay. But if you want, you can add a few fields. Though, I mean, those are definitely enhancements. The baddies are mostly used to create rules and for validations. They are not the same as enhancement structures over here. So you use the word baddies like enrich body and enhancement bodies and all, right? So body rise 0 is what it is called for enrich body. That body is where you define validations and rules. So you put your validations, like if a contract does not have SSP, don't let it come in, put it in error. So let it go and sit in error so that when we run the error tables, we will know that these are in error and we can rectify it. So you can define your rules, validations, everything in the enrich bodies and the other bodies that you have. And these bodies play again a very, very big role in RAR, right? So we are not going to go to bodies and all because really that's a lot of coding. It's a lot of technical stuff. But what I'll do is I'll probably show you the body that we have, which is coming from financial force and how that is defined, the enriched body and all. So, you'll get an idea on how we define the rules and the validations and everything in enriched body. But it's all that is done by the technical person because it's total coding. The import structures and everything are the fields that define that are captured over here. So all these basic MI, we were in this one, no? See, now you'll be able to relate to these, like the basic CO01, order items, basic fields for main items. So these are standards that are given. There is something called extensibility, and we'll come to that in this presentation itself, which SAP provides where you can add additional fields to these structures. So these are the item class types. This is the part that they've given you, define interface components. I showed you in FAR IMG. So you can go through this presentation, try it out, but you don't have to go through SPRO. Just go to FAR IMG, go to inbound processing, and you'll be able to come here. So everything is in FAR IMG. So this is again, we don't really need to get into what fields there are. What fields there are for functional people, come over here, say change layout, and you can see whatever fields are available. If you want something, you can speak to the technical people, get that, see if it can be bought in local currency 2, local currency 3, so many fields over here. So I'm not really going to cover all this, okay? Like you can go through these presentations, you can see what is what. But now I wanted to explain to you what is MI and CO. That is big time, big deal, which is main item and condition item. So this is again basic MI 01. Go through the presentation. If you have any questions, we can definitely visit this again. So this is like it's talking about each component, basic component that is always active in each revenue accounting item class. These, even in interviews and even in other stuff, like when they want to test your knowledge, all they ask is, they touch upon interface components, they talk about structures and extensibility to see how do you really react to it. Like this is the COPA grid. Now the COPA grid structure that you have, the COPA grid structure basically comes from the SD order item. So SD, whatever order it is posting to, RAR just adopts the same thing. So RAR just has to mirror that, the main contract in SD, and the COPA grid gets posted to. You do not want a different structure in RAR for sure, because you're posting it for the organization. So COPA grid is always, it just mirrors everything from SD. But COPA grid, if we have to define for CRM and all, and for FICA, that will be a different thing. So for BRIM, you have, for BRIM, you have the different flexibility towards the cost recognition and the revenue recognition, the way it happens, and you can divide it amongst different POBs at different timings and all that. It gives you more flexibility. So how does it really affect the COPA grid structure and all that is something that we'll have to study, but all that will have a little bit of difference. Okay, so how is RAR really going to mirror the COPA grid postings over there is something that I still have to see. But over here in SD, it just mirrors it. So we just, and it gets those characteristics from the order items. It posts, we just have to make it active in the system and everything is okay. So this is SDMI 01. So setting up a RAI class is this is a fancy diagram, it says enter a new entry with name, description, and RAI class type. Select the interface component. So try it out, give it a try, like in the inbound structure. Now that you have it, go to file img, and then after that delete it as well. Okay, because really we can have just 3 classes over here, but give it a try. So if you go to RAI accounting items and maintain revenue accounting item classes, you can define create new class and then see what all do you have to put in as you create a new class, and you have to put in new entries. Try creating order items, fulfillment items. I don't know if it'll allow you to create it because it's already created over here, but give it a try. So these are, this is like, step by step on how to do it. Activate configuration. So this is the basic data set up for a RAI class. These are the interface components, and setting up the RAI class interface components. This is the activation. Include structures. Now this is important. So this is the extensibility that I was talking about. So, the include function that SAP has, include ARL, POB, and reporting. So each of these fields that we have in the structure, you can see they are divided into either ARL. ARL is where you have the import structures and BRF plus rules, right? And for POB and for reporting. So you have all these, and over here, the system or SAP provides include functionality and extensibility. Now, extensibility and include functionality is used for enhancements, but it's important to understand that when they're talking about include and they're talking about extensibility, they're talking about these structures. Include EEW FAR, ARL, and you'll see these. So I know functional consultants don't really get too much into this, but really, even as functional consultants, you will end up seeing what is this, and you'll end up getting into the fields. So, now that you've heard this, at some point of time, you will be visiting this definitely in your jobs. So this is based on extensibility concept of SAP Easy Enhancement Workbench. This is EEW. It uses so-called extension, which includes structures to provide field extensibility. So, and it creates APIs, like I told you. And it includes the structures in all the relevant tables, internal structures, customer fields. So whenever you want to extend it and you want to create some personalized customer fields, I think change reason code, now has become a standard. I don't know, we've not used change reason code in this project, but when we were in TELUS, that is when we were co-creating this module with SAP. And at that point of time, we realized that change reason code was at that point of time, it was not there. So that is something that we wanted. And because everything revolved around the change reason code, even our reporting revolved around that. So change reason code at that point of time, we had appended it. We had appended the structures and added the change reason code. So all the customer fields, whatever you want, can be added to the extension. So these are the 4. This is the header at the header level, which is fine. But these 3, you will see this very, very often. Even as the technical person is talking to you, he'll mention these, and you all must know it. So do go through this presentation just to see these main points once, so that it kind of stays. To set up, to add customer fields, what do we do? This is mostly done by a technical team. So we don't really do it, but it adds the necessary customer fields and configuration of RAI classes. So the RAI classes over here, see, you have all the fields over here, okay? Mandatory and, so you can add the fields, whatever you want to the RAI classes over here. So whatever you, and that depends on really the design, and that is done at a very high level. Adding any fields to the classes is done at a design level and at a very, very high level during designing. Even later on, if you want to add something, that is an enhancement that is discussed with a big group. But this is what they mean, adding the fields over there. So this is configuring the import structures, adding customer fields, adding customer fields in RAI class. So I'm just going through this because I've explained this to you. Inbound processing, generate interfaces, which we just went to. And these are the functions. Configuring import structures, you generate it. It's a very intuitive one. Like you can, and this is a training system, you can try, adding something. Don't change the existing ones, please. Because everything is working in the back end. Because of that, we've already generated and the technical people have done it. So please don't change that, but try creating new ones and see what's happening. Try creating something for CAOI and all that and see what happens. Release status, I showed you those 3 dots that are there. So it becomes, that shows that these classes are released for usage. Generated transport of RAI class. This is what we were talking about, right? RAI class. So you can do RAI class workbench generation, that is your BRF plus, and you can transport it. You can individually also have SDOI and those individually in each system. Integrating with RFCs, RAI upload. I can't comment too much on RFCs. RFCs again is a very technical but usage of custom IDocs that can be generated based on the generated RFC enabled function modules. So function modules, so what I know and how I see is, if a RFC fails, I just go to SM58. I run the transactions, like I'm trying to do something and it's not happening. I go to SM58 and it shows that if the RFC has failed. SM58, SM59. And at that point of time, we tell the basis team and the basis team does whatever they have to. So inbound baddies. Inbound baddies is basically RAI 0 is the enriched body that we were just talking about. So you have RAI 0, which is enriched body for raw items, okay? So you see, everywhere they've kept it similar. Raw item is 0, which is, like I told you, which is for enrich. So enrich body is RAI 0. Then you have processable, which is enhancement, and that is RAI 2. And then you have RAI 4. And then you have quite a few other baddies, but I'm trying to show you the connection and how it is formed, so that next time, even when you're seeing that, hey, I want to check some validations, okay, let's go to the enriched body. So you know that is RAI 0, or wherever you see RAI 0, that is the enriched body, which is related to the raw items.
All right, now let's test your knowledge. Here's a quick question for you. Which feature of SAP RAR helps in handling contract modifications? Option A, data warehousing. Option B, event-based revenue recognition. Option C, contract change management. And option D, invoice processing. Take a moment to think, and when you're ready, do type your correct answers in the comment section below. Good luck, guys.
Hey there, ready to master SAP RAR? Our course is your ticket to becoming a pro at managing revenue accounting and reporting. You can learn at your own pace right here on our platform. Throughout this course, you'll dive into SAP RAR, a powerful tool for handling all things revenue related, from tracking sales to generating reports. We cover it all, from the basics to advanced techniques, crafted by experts in the field. Your instructors are seasoned pros, dedicated to helping you grasp every concept and answering any questions you may have. And guess what? Our students love it. People just like you have found our course incredibly beneficial. The best part? It's budget friendly. You won't have to break the bank to gain this valuable knowledge. Ready to become a SAP RAR whiz? Enroll now. For more details, visit ZaranTech's website